Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. This is our fun little weekend show. Looks like there is the old man riding around on a chicken. Actually, as fun in the lounge before we got it going. People were posting in fun chicken videos and stuff like that. It's always cute. I do see, though, it is the middle of the summer, and so things are a bit quieter on the site. It's understandable. Also, too, if anything, I would even say that pretty good anecdote of what a market looks like. That actually is probably a pretty good buy. There's no more talk about people, driving Lambos and stuff like that. That's all over. In fact, when I was reading the rags this morning, all I read about was, oh, this stable coin destroyed, and how this is perfectly playing into all the central planners' grand schemes, and it was all on purpose and all that. But, this is after the fact. Of course, after the crash, it's always, oh, yeah, this was all a plot by the conspiracy. I mean, a year or so ago, I couldn't stop you people from buying DeFi. God, I remember there were people who were actually making fun of me because I wasn't. So, this time it's different, Brian. Damn it. No, turns out it's the same old crap, just different pile. Yeah, well, capitalism is wonderful. If anything, what you have to learn in this business is not to take this crap personally. Prices go up, prices go down, things get manipulated. And the worst part about our sort of modern day capitalism is this goes all the way right up to the top. So everybody's involved in the Ponzi. I mean, everyone. So make no mistake about it. Your local politician is half of the problem. They would say they're probably, well, I'm half the solution, not half the problem. but I think that they're in it just as deep as there anybody else in the game, which is a bit of a shame. Actually, I was this morning for fun on Twitter. I went off on some guy. I mean, not negatively, but anyway, it's kind of interesting. Like you pull up an image like this. Oh yeah, but actually, before we start our rant, I want to show you an image of my world and how at the end of the day, when it comes to money, it doesn't mean anything. This is my life. Just and in a weird sort of way. I like to use the market as a distraction because anyway, I'll show you what my life is really all about. I was going through my Facebook page. It's so adorable. This is my life, and I'm actually very proud to live this life. This is my baby.
Where are you? Peekaboo. Hi. Can you say hi? Hi. Peekaboo.
That's
You
my
got so
baby.
big.
I know. Look at. I mean, God, I used to play this exact same game with him when he was just a toddler, right? And yet he still. This is what he likes to do for fun. And he doesn't care about Federal Reserve chairman or Bitcoin and the grand conspiracy. Oh, hello, I get on this page. Anyway, there's our video. So it's I think it's important for all of us to put everything into perspective, and I actually like to use Liam as a nice little sort of reality check. And of course, once I'm done this video, I'll go off and hang out with him, and really, Bitcoin is the farthest thing from any of our minds, and so as a result, like so, it works as actually a very good sort of reality flush. Just what is actually important in life. So thank the good Lord that I have the ability to be with Liam and go live his life. And I'll be doing that after the show. And I think you probably heard me. If you have never seen Liam on my personal Facebook page. That's what I use Facebook page for. I just post videos of Liam. But the irony of it all is he just doesn't want to be on camera these days. And I keep asking him, like, we've been driving up into the mountains lately, and we usually stop and throw rocks in the water in mountain lakes and stuff like that. But he's just not interested in doing any activities lately. So a little bit of a lack of videos for you guys, but nonetheless, he is the center of my universe, and he's also a really good way for me to keep grounded and disconnect from the market. And interestingly enough, he's a nonverbal, so he doesn't really like to talk too much. So what ends up happening is when we go on our long car drives, I end up sitting thinking about grand economic theories and stuff. Gives me time to think as well. So anyway, it's win-win. So I was perusing some economic data this weekend just for fun, because that's what middle-aged balding fat economists do. No, maybe not. Anyway, I ran across this chart. This chart really it jumped out at me, because actually what's going on is exact opposite in our society with what actually the economics suggest should be happening. So that's the irony of all this. This is the speed of which money is actually being spent in the economy. And you can clearly see, this is the effects of the demographic generation, right? The baby boomers all hitting their peak earnings years and then piling into the housing market, and of course getting completely destroyed by the banksters. And the worst part about it, of course, is that not a single bankster was ever held to account through all that nonsense. But in essence, this is sort of the after effects and this millennial economy that you are all sort of in, most of you, because I do find actually Grimm's one of the very few people on the site that's still around from sort of the beginning days of TRI. Great to still have you on board, sir. In fact,
glad to be here. Yep.
I think you joined when David O. Were you around when David O. won the contest? I think.
Yeah, we were. That was my first class as well.
Yeah. So David does lots of work with us through the Secret Options Formula Club. But yeah. Anyway, point of the matter here is this is a very interesting economy that you are all coming online. This is actually an economy that's slowing down. It's unwinding. I mean, that's the irony of all of this. The governments keep coming in here and sort of putting sort of bandages on the situation, and doing these short-term stimulus programs and stuff like that. But that's not sustainable, right? They do one-shot deals kind of thing. Boom, okay, that's done. As the baby boomers, of course, were moving through their life cycle and entering into their peak earnings years. If you have like 100 million people all getting like a 10-20% raise over year, and rocking and rolling, and that translates into a lot of money. A lot of money being spent, a lot of money being saved, right? But interestingly, that this image is basically the polar opposite of that image, which is fascinating. I actually didn't think that the speed of the money being spent was actually as bad as this image suggests. There's guys. If Mr. Trump comes storming back, I'm sure you'll probably hear more from Larry Kudlow. He used to be sort of Trump's economic advisor. And he actually made the argument that this is, somebody's asking, what is this image? This is the velocity of the M2 money stock. So it's like the speed at which it's moving around the system. And what I was just about to say there was Mr. Kudlow. And, there are two schools of thought when it comes to what inflation actually is. Is inflation a function of money printing? That's sort of Milton Friedman kind of thinking. Or is inflation a function of the speed at which money is actually being transacted in the system? And the more transactions, especially when you went through that housing boom there and everybody buying up their houses, which I guess was this boom here. I guess it was artificial compared to the broader economy. But that theoretically should be inflationary, the speed at which money is being spent. So guys like Larry Kudlow, he's a big fan of inflation is a function of the velocity of money. But if you look at this image, of course, this is the exact opposite. What this image should really be is insanely deflationary. And that's the scary part about it, because I think what this image is saying is this is probably where do I have it? This is kind of heavy macroeconomic stuff to start this video off. I don't know that this is even really smart of me to do. Brian, I just sort of talk out my butt. So here we go. But what's supposed to happen, right, if everything's equal, is that you have an economy that's growing, and this is like the post U.S. Civil War generation. They were born in like the 1860s, 1870s, came online, hit their peak earnings years in the 19 teens, in the 1920s. And that created this greed cycle. This was them all, the roaring 20s and all that kind of talk. Of course, that peaked, and the president at that time was not part of the banking system. And he just said, look, if you're going to go in and speculate in the stock market and you lose money, the stock market goes down, well, it's your own bloody fault. You take a risk, and that's what, hell, you know what that is? That's what crypto is right now. It'd be interesting to see to stop the crypto pain, they actually come in and put in price floors on crypto. That would be hilarious. I don't think we'll ever get to that point. I think Big Brother would prefer that that would be that the US dollar becomes a US dollar stable coin, whatever bullshit. And keep in mind, just, like I'm hearing all these people thinking, oh my God, these central banks are going to create these central digitalized currencies and they're going to take over. Keep in mind that the market is the final arbiter of all of this shit. And if the market doesn't like this stuff, then the market will move on to whatever it is interested in. So I hear a lot of people just assuming that, these governments are going to introduce these central digital currencies and they're just going to have no choice but to use them. But hey, everybody, that's called totalitarian dictatorships. And I know for certain that, and more importantly, sort of that communist ideal that nobody really has any freedom. I know for certain that a lot of these banks are actually owned by private citizens. They are private shareholders. The Rothschilds are private individuals. They don't want to have some government coming along telling them what to do. So I don't believe that all empowering centralized digital currency that you're all fearful of. And I see in the media, holy moly, are they ever touting that to really pump like the fear, which of course also pumps sales and subscriptions to newsletters and shit like that. And that's the one thing I really dislike about our society. Half of the time, half of the message you guys are being spoon-fed is just to get you to act and appeal to your emotional side. Just so disappointing. But anyway, I suppose it's why we only have like 30 viewers instead of like 30,000 likes and subscribes, because hey, this is the most incredible thing that's ever happened since yesterday. Right? Isn't that how this show goes? Josh. Alrighty, getting the sound bites ready. There you go. Actually, I will say, Grim, it's good that you're here. Remember last term a student pointed out that harami technically in Japanese candlesticks can have the baby outside of mummy's body. So we did up one of these little video summary things. Chris and Josh have been doing a great job with these little productions. And they did up a little one here that I just did sort of a public bark about Japanese candlesticks, and I'm the message of inside bars doesn't change, so that's the good part about it. But when you're talking to the good students, because I think you're doing fractals and candlestick patterns this coming week, is that not correct? Right. So I wanted to ask Chris if he could slide that to me. So yeah, I'm just going to put it in the level 1 room there, and we should probably pin that, and I'll do that right now. So it's just anybody who's in the level 1 program watching this, or if you want, I'll also type it in there. We should probably have that as sort of required viewing. I think it's like 10 minutes or something. What is it? 9 minutes. On top of the video lecture that I did. And then, of course, Graham, he does his own sort of mini lecture for you guys. I think between the three of them, you'll get the message correct. Okay, so back to our original story. Sorry, totally off on tangents. So if the economy acts the way it's supposed to look like this. And that, interestingly enough, if you look at charts from back in the sort of 19th century, if you will, this is the way actually the economy normally behaves. You go through boom cycles where everybody gets rich. You go through bust cycles where everybody is like just depression central. So the central planners and sort of, unfortunately through this period, and it's interesting how this seems to happen about once every 80 years with this human species. But we have to go through this whole period of asking what is currency, what is the value of currency, and do we want to continue to use whatever the sort of assumed hegemony proxy was of the previous cycle? Do we want to continue using it? And if we do, then what that means is they have to do a quote unquote great reset. Klaus Van Dickhead over there in fucking the World Economic Forum, all that talk. Through the 1930s and 40s, which is, I think, sort of comparatively where, if we were going to say you are here now, I think, believe it or not, we're sort of like right. I'm going to say sort of like right in here, right in that sort of time period, right in that area. So we went through the dot-com boom. You saw how the money supply was accelerating, and the economy was actually doing exactly what it's supposed to do. Baby boomers were working more, saving more money, buying more fancier and fancier products, right? Vroom, 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 nice bull economy. Then in 2000, what we should have done is it should have been a pretty nasty correction. It should have been basically an unwinding of the entire cycle. The only problem is we live in a world where we're not allowed to ungrow. This scenario, especially for banksters, they can't allow this to happen. Because remember, banks lend money. That is their primary business, is loaning money. How do you make a profit in this kind of environment? It's impossible. You can't loan money to people that are bankrupt. So they had to figure out some sort of workaround. And what's interesting is this is pretty generational. It's pretty normal, right? This is like 35-year sort of adult cycle. Obviously your first 10, 20 years of your life, you're not really making much money. Gotta blow my schnoz. Hold on. As you work through your earnings years, right? You work up to sort of like peak earnings years, 50s, 60s. Then you want to unwind. So you might even argue that this is like, maybe 30 years old up to your 50s, 60s. And then this is 50s, 60s into your 60s, 70s, 80s. You're done. And then we pass the cycle off to the next generation. And it just, generation after generation after generation, we go through these very normal cycles. The interesting thing about coming at this following cycle, keep in mind, everybody that lives in the current cycle is going to be obsessed with whatever happened in the most recent cycle. So the most recent cycle here, right? This was all about, oh my God, crash and bankruptcy. And they called this the dirty 30s and all that. So everybody, all politicians and stuff, right? Especially the guy who's in charge of the United States of America right through here. Actually, the guy who, where is that? Because the guy who was in charge right through here, he kind of wanted to put the banksters in their place, but he also made a lot of other enemies and he was removed from the equation. But especially the guy like right here, the guy who was in charge like right in this area, he really messed with the system. Theoretically, in years gone by, there's an old sort of adage that you do not mess with the value of your currency. Your currency is technically your country's capital stock. And if you have a lot of assets backing your currency, a lot of assets versus liabilities, well, your currency is going to be relatively highly valued. In historic terms, they used to always value currencies against, hard physical assets like things like gold. And the United States dollar was basically, especially following the Great Depression, where they actually marked the U.S. dollar to gold, and everybody on the world started standard following the Second World War sort of said, okay, fine, U.S. was obviously the sort of big economic power that came out of the Second World War. Really, it was a question of, was it going to be Britain or U.S.? And I think U.S. was basically the next generation following Britain, or were we going to live in a Germanic sort of centered world? I think the conclusion of World War I settled that. So, and interesting how the French kind of got played through the whole damn thing. But what was fascinating about this period right here is actually a lot of countries at this point, after seeing the Americans go on their just absolute insane spending spree through Vietnam and creating the what do they call it, the war on poverty with Johnson and stuff like that. Their budgets completely blown up. Oh, this is kind of sounding a little bit familiar. Anyway, a lot of countries said, you know what, we don't want to be a part of this system anymore. We want our gold back that we gave you following the Second World War. And a country like France actually drove up their battleship into New York Harbor and demanded, we want our gold back. And the Americans went, I don't think so. And of course, you all on social media and stuff have seen those feeds. What happened in 1971? Well, Mr. Richard Nixon, Tricky Dick, of course, somewhere in this area, basically took the Americans off of the gold standard, which to a certain degree is kind of like breaking the rules. But his ultimatum was, look, we're fighting this Cold War. You're either with us or you're with them. Right? And what we'll do is, since, of course, we control the crude oil markets, this was, I guess, prior to OPEC, we're going to have you buy and sell everything that you do through U.S. dollars, which is interesting because the oil sort of system remained, even though OPEC came around. So, point of the matter here, we leave the gold standard. So this is sort of the start of the unraveling of the U.S. dollar. So like here, U.S. dollar, very strong, very powerful. And of course, the people that were sort of in charge of the system, the central bankers and stuff that we all dread right now, they actually started here in about 1913, 1914. And fascinating, the politician Woodrow Wilson, who actually approved the bill to let the Fed actually take over, he actually even said, kind of on his leaving office, that was the worst mistake he ever made as a politician. So you could make the argument that this whole cycle, the Fed existed, but they weren't in control. I might argue, coming out of the Great Depression, FDR made some deals with the Fed that basically guaranteed their control. Then coming out of the Second World War, they created this sort of the world order, us versus them, the West versus communist, and you either use the U.S. system, you weren't going to use the British system. The French, of course, they were sacked, right? Whose system were you going to use? So it's either the U.S. system or somebody else, and that's that Bretton Woods sort of framework. That worked through the next sort of greed cycle. Kind of think of that event right there as sort of like your great reset. That probably this is the kind of same thing that Klaus Schwab wants everybody to buy into, that we're all going to come together. Probably, and the worst part about this is I think that what ends up happening here is this is actually just a prelude of what's really to come, sort of the main event, which I think happens in 2027, 2028. I wouldn't be surprised if there's a build out through 24, 25. The Chinese would really like, from what I understand, the Belt and Road Initiative. I think it will be sort of a catalyst for growth. People are going to, what I heard recently was Nike, for example, now is blaming all of their share woes on the fact that the Chinese market was being locked down. So the whole problem with the global economy now and weak stock prices, which of course, because we know Larry Finks basically owned the US political system, their stock prices are paramount here. They're going to, rah, we got to get those Chinese back spending more money, buying more Nike shoes, all that kind of stuff. And interestingly enough, I personally believe that the Chinese real estate market popped, the bubble popped there with the interest rate cycle changing. And I personally believe, and this is just Brian's crazy nutso-ness, that the economic conditions that you see in China, the slumping of the economy, all that kind of stuff, more a function of the financial situation and the bubble popping than any sickness. I think the sickness worked well to sort of mask the fact that the mafioso got away with just stealing ridiculous amounts of money. So such vast amounts of money that, even anybody watching this video, we will never see the kinds of money that was stolen out of the system by the Chinese mafia. In our lifetimes, we're just funny little spectators. But anyway, that's here nor there. It doesn't really matter. So point here is, and interestingly enough, through this scenario, sort of the backdrop, in this scenario here, currency extremely strong, capital stock really strong. It'd be interesting to see sort of like debt to equity ratios. Interesting through this, the U.S., things like debt to GDP went up dramatically. And what was fascinating through this is I was always sort of, in grade school and stuff, you were taught that, well, the reason why the debt went so high relative to GDP was because of the Second World War. But I don't think that that's actually the case. I actually think it's more of the government basically took all the bad bonds. The guy who was in power here, he said, screw you, government's not going to bail you out. We believe in a strong US dollar. And if you want to save your money, just save your money, save your money, right? Now in this world, you don't want to save your money. I mean, it's almost pathetic the way they've set the system up, right? And I remember the COVID craziness, Janet Yellen. Politicians are going, what are people supposed to do? Do they want to save some money for a rainy day? And she's like, invest, don't save your money. So that's the irony of the world that we live in, is saving your money is actually like some sort of taboo thing. Gotta put it into the stock market, which, as you see right now, that's not always a good idea. Keep in mind, they want you to do things that will service their needs. Now that the interest rate cycle has changed, I find it fascinating that through the crisis here, which was just at the very beginning of this big drop right here kind of idea. And actually probably better to show you. I always do these lectures in sort of not spreadsheets, historical tabs. There we go. Macro. Yeah, this one. So here's sort of a you are here now. And what's fascinating is if you actually take all the money printing into account, this is no money printing. And of course, this is back when the US dollar actually was worth something. If we actually look at the Dow Jones Industrial Average on a regular basis, not taking into account the money printing, the thing's, of course, through the roof. And it's sort of like what's real and what isn't. So if you actually take the money printing into account and just sort of try and minimize the money printing, you actually see that these images are incredibly similar, which means, if we just line up the scales here, it's not rocket science. The irony of economics and trading is it is not rocket science, but you have to filter out all the bullshit and the ways that the banksters and stuff try to deceive us. That's the hard part of this game, which is so tragic, eh? The hard part of this game is we have to try and figure out what the people who are in charge of the system, what they're lying to us about. That's the hard part of the game, which is so sad. It's like if we do like a current market analysis, what's the general tone in the marketplace right now? I'd say it's pretty bearish. You go and read all of the fucking rags and everything's bear. It's horrible inflation. And yet I actually make the argument, especially from some of my recent tweets, that I think actually the market looks pretty good here. And probably the smart trade is to be a buyer, not a seller. Actually, it's interesting, like this Ethereum, a really interesting example. This was a previous bottom. I put this tweet out earlier. This was a previous bottom, and I didn't even put the date on here because I didn't want you to get sort of distracted by dates. But hopefully you can see the very similar price pattern, right? You have this M up here, market dumps to new lows. Then we have counter trend rally, works its way up. Then we have a pullback right down into here. Then you have this bottoming pattern. And really what I said now is, can I just please have a nice little W and a breakout? And you can see what ends up happening, right? Bearish. And all of a sudden just bang. Market rallies right back up and away we go, and we're back in a bull. And it happens in like an absolute flash. So, this is just one example. This is actually what they call, and I did it off of this doji low. I suppose we could do it off of that low as well. But this is what we call a descending wedge. And ironically enough, descending wedges are actually inherently bullish, not bearish. I could go off of there. It's not a terrible level. Actually, I don't mind. I mean, it doesn't really matter. It's here and there. Anyway, this is a descending wedge. And when we get to the end of this descending wedge, look out. You can see the descending wedge here. Can you see that? Just off of this little image. Suppose I could probably. Oh, actually, look at that. I didn't realize I had a frame on there. There we go. Hey, cool. Look at that. So you can see the descending wedge if I just go, whoops, what the hell did I just do now? Oh, I see. Now I'm just messing everything up. Anyway, let's see if I can show you this. This is from years ago. Like I said, I didn't want to put the date on, didn't want to put the price. All I wanted you to see was this similar price pattern. Something like that. And something like, I guess that was that one there, like that. Oh, come on, you. I guess it is bring to front. Anyway, something like that. That's called a descending wedge. And when it breaks, you can see the W basically at the end of the wedge. When it breaks, boom, away we go. I know, by the way, price took off here. So, point of the matter here is, I find it fascinating how if you go out into the public, you read the just the rags. I mean, the anti-crypto bile right now, bile. I don't know what the proper term is. I mean, it is palatable. It's quite remarkable. And actually, I like this. This is a really good function of this site, right? We just go on the news panel here. Let's see how many negative articles there are about crypto on here. And remember, if we see a lot of negative of something, does that mean we should get wrapped up in that kind of conversation? Or should we maybe even be thinking the opposite? I think I saw off of like AP here, I saw negative crypto articles. I'm actually not seeing too much. Well, that's kind of good, I guess. Oh, I thought I was. Oh, there you go. How's that? No, that's not what I wanted. After TRIs, think the opposite of what the media is saying. Well, that's smart. If it's one thing I've done, it's I've gotten you guys out of sort of the mainstream. Oh, everything's hunky dory. Just listen to what the news tells you, and you'll do fine. That's usually asking for trouble. Actually, don't even. I'm not seeing too many crypto references. So if anything, maybe that's good. And I did put out a tweet earlier in the week. Who was it? It was one of these Rant. They were just going on and on about crypto. I couldn't believe it. Probably one of these guys. I noticed these guys are really, really sort of in. I think the media control, like the people who own the media, and they want the public to be thinking a very specific message. I notice these guys are usually right on the forefront of that. So if they want you selling, then they're going to be just touting ridiculously bearish articles. And if they see, this is interesting how this guy here now, why wouldn't this guy put his video out right at the top of the market? Wouldn't that be smarter? And then he'd look like a fucking genius right now. But why is he calling for 15,000 now after the market's already lost a huge chunk? That doesn't make. I've always that always bugged me, the way that they do that. They end up getting. And you know what the interesting thing is this hasn't changed. I mean, I've been playing this game now forever, and I remember at the very top of the market in 2000, I used to watch a show called Wall Street Week with Louis Rukeyser. And right into that dot-com peak, all but one of his analysts were bullish, and these guys were all supposed to be like the the smart money. So even the analysts themselves, they all get sucked into the bull. It's kind of like what happens with Bitcoin, right? Well, this time it's different, Beamish. Get your act together, man. You're losing out. I mean, every single time it happens. And I could usually tell almost exactly when the top's going to come in when I finally acquiesce and go, okay, well, maybe the kids are right. This time it is different. And like within days of me thinking that, damn top comes in. I remember that basically happened this past fall with DeFi, and I was living with one of our Korean barbecue guys. I haven't talked to him in forever now. And he was all rah DeFi, of course, and of course, Sjord and his Luna adventures. And oh yeah, Brian, this stuff's bulletproof, man. Yeah, there's no way he's going anywhere. Yeah, right. Come on. Oh goodness. All right. Anyway, I was half expecting to show you a whole bunch of negative crypto articles. It's fascinating, actually, how I'm not even seeing them talk about crypto in here anymore. So that's interesting. Well, actually, you know what? And that's interesting too, because another thing that sort of jumped. Yeah, it's interesting, Josh, that you said that, because that's exactly where I was going. Was before we got the show started, and I tell you, I mean, the whole point of us building these tools is to try and help you be on the right side of the market. Hey, there's YouTube over there. Hey, there's 30 people over there. Yeah, it's not bad. And I thought there was only 5 people watching today. Yeah, that's good. We're moving up. Those videos are brilliant. Yeah, cool. OTR listening. Okay. Yeah. Okay. So, I got about 3 or 4 thoughts going here. So sorry, everybody. I kind of screwed this up. Let's finish with my macro rant of insanity, and then we'll pop on over. We'll see if there's any questions, and maybe interact with what people are saying, and then take a look at things like crypto and stuff. Tell you, I still think that the market's a buy down here, but oh well, we'll see what happens. So one generational cycle where the US dollar was solid and trustworthy. Next cycle, well, we don't want to see this happen again to us, so we're going to change the rules. Thank you, Tricky Dick. We're going to take the US dollar off the gold standard, but because we're fighting this Cold War thing, and you're either one of us or one of them, if you are one of us, you better use our system. That's basically what Tricky Dick said. And keep in mind, Tricky Dick was one tricky motherfucking son of a bitch. And you think I swear? Woo-wee! Go listen to those Nixon tapes. Then what's fascinating, and this is sort of, I think, to a certain degree, almost exactly what happened with Mr. Biden, is we get to the end of the fear cycle, and keep in mind the banksters have absorbed. In this particular case, actually, they had to absorb the S&L crisis. But you had a politician come to Washington and say, and really, he really wasn't a politician. It's almost like calling my finance minister in Canada right now a finance minister. She's not a finance minister. She's a career politician who's done just about every job in the cabinet, but she has no sort of practical experience in finance. And so as a result, oh, well, the reason why Canadian house prices are so high is because we're so popular and this is the cool kids table. Come on. There's other things going on than that, dearie. But oh well. So through this period, Mr. Reagan, of course, same sort of thing. He was B movie actor, and half of the reason he was probably elected was because all the people who were sort of coming on age and entering the sort of voting populace, they go, hey, I remember him. Yeah, he was always one of the good guys. And so he got elected, no problem. He comes to Washington and says, deficit spending? Well, we can deficit spend. Was that a very specific message by the banksters? Because, of course, this is deficit spending is their bread and butter. Once they convince a government and a society to go down, not only removing their currency from a gold standard, thank you, Mr. Nixon, so now there is no value to the currency, but next we actually say, well, we don't have to balance budgets. We can spend all the money we want. That's basically like you saying, hey, look at all these credit card offers. I got 47 different credit card offers here. Why do I need a job? I'm just going to keep going, taking out credit cards. Look at 47 of them. Each of them's got like a $2,000, $3,000, $4,000, $5,000 line of credit. I'm set for the next 50 years. Is that good economics? I mean, seriously, folks, it's just that simple. The irony of all of this is if you just sit down and you just break down in simplest terms what's going on here, it's so bloody obvious how this is horrible economics. But the problem is that we live in democratically elected government society. Is there anywhere in any voting booth that you go to that says, please remember, your vote is going to determine the future of your nation. Is there anywhere that says anything along those lines? No, you just got fucking Mr. Orange to pay. I mean, I don't even know what the hell his message is. And then Mr. Over the Top Socialist. I want all the workers in Delaware factories earning as much as Wall Street executives. Ironically enough, and there's one gentleman on the site who says, Brian, quit conning yourself. There's not really much difference between the guy on the left and the guy on the right. They're all puppets of the banks. I mean, come on. why are you deluding yourself? And I have to say, Mr. O, you know who you are. You're probably right. But anyway, that's a conversation for another day. What's funny is the Rothschilds themselves even said they don't care who's in charge of the government. You give us the power to print money and issue money, and we are the government. And you see what I find hilarious is these. They used to be like when I was growing up, it was like, okay, we got to keep these central bankers, on task. We got to keep them honest. So we're going to have them come and report to Congress on twice a year basis. We're going to call it the Humphrey Hawkins testimonies. And this is very serious. We're going to hold these guys to an account. And yet, when you actually watch these things, it's remarkable how it's basically just like a very scripted soap opera. And that's right, man, Nicholas. That's what I've told students all along. Nothing's ever changed. That politicians' number one job is just make damn sure they get reelected. That's the only thing that matters. And you do it 2 or 3 times in a row, boom, you get yourself an instant. And keep in mind, federal government pensions, woo-wee, they are sweet. I mean, you could, as long as you can get reelected, I think the House of Representatives down the states, you have to get it twice. But I know, like, for instance, in Canada, if you are an MPP, which is, member of parliament nonsense, name plate, I think if you get elected twice, you get a government pension, and basically you're set for life. I mean, it's a 6-figure salary, and of course, all health benefits, everything. You're guaranteed made in the shade. And actually, it's interesting. Most of the previous premiers in my country, they end up going on to be consultants because they get such a fat government pension. They just sit and open up a consulting business, and they can operate around the world. And any taxes that are owed, well, let the pension pay for the taxes. And I just set myself up as a consulting business. I'm made in the shade for the rest of my life. So ironically enough, I mean, my current dear leader, I think he was elected twice as a minority. I don't know. I don't think you have to be a majority. I think you still get it when you're a minority. But he's going to set up like a substitute drama teacher consulting business and report like $500,000 a year income, tax free. Why? Because his pension from being a prime minister pays all his taxes and his expenses. Pretty sweet deal. Tell you, man, I should have been a substitute drama teacher. There's obviously, I don't know whether it's being the substitute drama teacher or maybe it's being the son of a former communist leader in our country. That must be the reason why it's gone so well. I'm sure it's not the substitute drama teacher angle, but maybe that was it. Maybe that's the secret to all of this. I don't know. Okay, moving on in our story. So Hollywood B actors come to Washington. Of course, our story about the banksters, they started here. They could do nothing through this, and they got destroyed. So they basically hijacked Roosevelt and said, look, we're not going to start lending again until you play by our rules. Through the mid to late 40s, of course, Bretton Woods was set up as sort of the U.S. dollar hegemony system, the great reset of that particular generation. All tickety-boo. Interestingly enough, I think when did Tricky Dick first win his seat in California? I actually think it was. I don't know whether it was through the Second World War or not. It might have come on a little bit afterward. But it's interesting, like Kennedy, for example, he was in the Second World War. Anyway, Tricky Dick does his thing to keep the whole system going. And of course, the deal here, if you are part of the West and fighting communism, then you're not going to say boo. System continues on. Now, this is an interesting point in the game because the banksters are in full control and now the currency is worthless, right? It's technically just being propped up by this blackmail of sort of the Cold War. So, how do we keep the game going? You have to increase the monetary base to be able to keep lending, right? And remember, that's the only thing the banksters care about. Got to keep lending, right? Because that is their business model. So, Mr. Reagan comes to Washington and says, deficits? We don't need to worry about deficits. And then he says things like, we want a 300 ship U.S. Navy to fight the Soviets, right? Because that's the real problem in this world is the Soviets. So U.S. goes into insane, of course, economic expansion. And I lived in L.A. through this period. I remember, boom, 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 after Reagan came to power. My sister's boyfriend, his dad worked on the B2 project, or it was the B1, I can't remember, one of the two. And he was not allowed to talk about work, but oh boy, there was a lot of economic activity in Southern California through that. A really good example of that sort of expansion from sort of deficit spending kind of world. As well too, we have the baby boomers all coming online. So the economy, this one was personified. It was almost like the perfect storm. As well too, we had a peak in long-term interest rate market. So you had interest rates actually shifting into a falling market for the next 40 years. So that also exacerbated the situation. Anyway, point here, market went zooming up. There's your dot-com boom peak. Then their generation had to retire, and so that's what we just went through. Interestingly enough, very much like Nixon, just as the economy was about to roll over and we were going to start cleaning up the excesses of that previous bull market, along comes a housing crisis. And then Mr. Bernanke unleashed his gift to the world, basically taking advantage of the fact that the U.S. is the world's hegemony currency, and he basically just pulled a Zimbabwe. He pulled a Venezuela. It's the exact same thing. And just basically said, we're going to just print a whole bunch of money and we're just going to print our way out of the problem. And unfortunately, that's, I think, direct sort of cause of this current inflation problem. Ironically enough, in the face of the economy decelerating, which actually means that things should be weakening. Ironically enough, if you look at it, I mean, it's ridiculous. You can do a simple Google search. I mean, it's really easy to find this. And almost everybody in the public talks about it. There is the quantity of dollars in this system. I mean, this is crazy. And the problem here is that I suppose if we were on a relatively stable path, the market could handle that. But you can even see here with this, with the health crisis and stuff, we have literally gone parabolic, and unfortunately, this is the kind of thing you don't want to go parabolic. And you're worried, why has this inflation bugaboo appeared? And the great part about it, and if anything, it's been a privilege to be able to been a privilege to be able to introduce all of you. The irony of it all is that I don't even think a lot of you have ever even heard of this guy before. But he was all the rage back in the 70s as like one of the only checks to runaway government spending. And in that scenario, it was Johnson with his war on poverty and the U.S.'s war in Vietnam. And this particular one, I think you could say it's the U.S. Financial crisis, which is really, no offense, it's basically the banksters. To all intents and purposes, they just stole a generation's wealth. right out from underneath you guys. You guys didn't even see it, but they literally stole the whole millennials' future earnings right from out from underneath them. But anyway, point of the matter here is, of course, now governments have just absolutely insane, like $1 trillion deficits. Come on, what the hell are you people doing? And he basically, in the Twitter feed, I'm not sure where I have that. Do I have it over here? I think maybe that was the page I was on. Yeah, it's gonna take me forever to find this. But he a great video, and actually, I think even somebody on the site even posted in the lounge recently. Further, Milton, he has like a whole series of videos that he did to try and keep these silly politicians and banksters honest. And actually, I was watching it again last night just because that's what a middle-aged, balding, fat, boring economist kind of guy does on a Saturday night. But he was even shared the videos on the site. He was connecting CPI, which Consumer Price Index, your inflation gauge, and the growth of the money supply relative to sort of the economic output of the society. And I think that's probably the key to all this, is it's all relative. Here, this. So, great video. I'll even throw that on the. I don't know whether these show if people watch the videos later on, but anyway, there is the video link. And it's the same thing, right? So, why do you have this insane price inflation right now? Well, come on. I mean, nothing's changed here. It's the same damn thing. So, anyway, I guess the point that I would just make is that there's really nothing new going on here. It's really a question of how they're sort of finessing the system to sort of, like I pointed out here, this is when Bretton Woods happens. This is sort of where I think we are on the relative cycle. And what's fascinating about this is if you go back and you look at like the inflation data from like 1942 and stuff, it's just sort of like, the beginning, well, I guess the meat and potatoes of the Second World War. Inflation numbers were through the roof, exactly what we're going through right now. I mean, almost identical. So I've actually made the argument that I think that right now, if you think 22, 23, of course, Benner cycle, we know this is supposed to be crap anyway. But I think this is exactly like 1942, 1943. And if we could go back, I think this is also exactly like 1862, 1863. And then you go back 80 years from that, 1782, 1783. And my hunch is, and I don't have the data, and I know that was from the sort of U.S. American Original Revolutionary War, the U.S. Civil War. What do you think the odds are there's going to be some sort of war the United States is going to be dragged into here through the next couple of years? And, as I had said earlier, I think actually this is the prelude. I think the actual really big shoot 'em up, which scares you, is in 1950. And it's interesting how in 1950, this market took off like a rocket. But I think that's actually the big show, is in 2030. I think that's when the really big show hits. I think what you're seeing in Europe right now actually is just it's sort of like what you're seeing in Europe right now. I think the similarities that I've made is that I think what you see with Russia and Ukraine is very similar to what Italy tried to do in Ethiopia. And also too very similar to the Spanish Civil War. So, and of course, we know what came in the decade following those events. So, unfortunately, everybody, it's going to be a tough period ahead of us. It's interesting times to live in. It's interesting. I had, kind of a funny side note. I remember in 2003, 2004, it was like right in Probably right in this area. I read a horoscope that said that I would have 30 years of financial prosperity ahead of me. And it was interesting how I counted that out. And it basically meant that I will do well into the early 2030s. And then, unfortunately, the cycle shifts, and I have 30 years of shit financially ahead of me after that. So I like literally sit in bed and I literally this entire 20 years since then, I've literally counted down the clock to when 2030 comes along, and literally I have to be out of everything. Fully pensionized, own homes outright, have big stores of money to pay outlandish taxes and fees and crap all ready to go, because once that cycle turns, I don't want to fight it. And I will say that over this period, financially, I have not really had too many concerns. So it worries me for after. But anyway, that's a side note. So I'd still be long the Beamish futures, and for the next, what is this, 2022? Yeah, I'd be long Beamish futures for a good next 8 years. Once that's done, after, and this concerns me, right? Because we have a guy on the site who says that in 2027, all hell's going to break loose. And I kind of like that thinking that, near the end of the 2020s, early 2030s, that should be a repeat of the Korean War. And I think that's going to be the real war. So, but anyway, only time will tell. All right. So, yeah, there's a prognostication, eh? Write that down. But anyway, what the hell? We got 8 years to enjoy ourselves. But we got to get fully set up in like rural Western European countries that have lots of mountains in between Europe and Asia to absorb. No, I don't mind what rural Portugal. Rural Portugal works well. If anything, I'm a little bit leery about being too close to the ocean, right? Because you might. Well, I don't know. See, I mean, like I would. If we're lucky, by the end of that, we do have several satellites, so we can choose where we want to ride out the storm. But I do like the idea of like rural, completely off the beaten track Portugal, maybe in like a nice mountain valley or something like that. That we can grow all our own sort of local vegetables and all that kind of stuff. And Cotter's going to teach us how to build chicken coops and the whole thing. We could have our own solar power, maybe our own hydropower. That's yeah. I think that's an admirable aspiration over the next 2 or 3 years. And then that way, it's sort of like a bunker. We can ride out the shit in 2030, stick our heads above water. And if we're really lucky, like I said, mind you, I will say Eddie found a place in Spain, near the Mediterranean in Spain. And wow, does that place ever look good? But, oh, geez, I can't get distracted. Anyway. Okay, what are we supposed to be doing here? We're supposed to be answering questions. Doesn't look like there's many here, so not to worry. Tomorrow, of course, is a holiday down in the States. And if anything, you got to be careful through these holiday weekends, especially now that Bitcoin's become sort of more mainstream. I think you got to, I think, what I find fascinating is I hear, and it's like it's fascinating because it's the only word I can use to describe it. I don't hear a single person saying anything negative about Bitcoin. I mean, I literally do not hear a single negative ever mentioned about Bitcoin. Not one. Which leads me to believe that the 1% likes Bitcoin. And, as I was tweeting out earlier today, and it's sort of half of the reason why I went on my crazy rant as I did. the backdrop of this world economy, this is really, really bad. And I don't think that we're through this for probably, like in the 1930s, they called it the dirty 30s. I could very easily see where we have to have like a decade of crap. I really could see that, folks. Don't kid yourself. I think we'll have our normal 4-year seasonal cycles, but maybe this cycle is, maybe you can make millions, you won't make billions, that kind of thing. But as I had sort of said, this is a pretty negative image about the actual economy itself. Don't fucking go on about Fed printing and politicians stimmy this, stimmy that. This is the economy and what's actually going on with the economy itself. So that's a bad image economically. Could we have another health crisis and another big round of panic stimmies and taking interest rates down? Sure. And my hunch is that if we do have more crisis, that is going to be their solution. And the 1% is perfectly fine with the price inflation. They don't care. It doesn't really make that big of a difference to them. But the working schlub, like the comment that I put out here is, and I like to, I love that valued viewers, like all of you are valued viewers. I love that line. But I sent him basically a reply, and his answer was, because of all the technological and outsourcing deflationary forces, those forces will continue. And I would have to agree with that. What we really need is we got to somehow get these central planners, like that big fat guy fucking from Mexico, BIS dude, who now sort of, he's become like a banker, a celebrity, that big fat guy. And the old Bank of Canada governor Mark Carney now, oh my god, like that guy like walks on water now. You got to be kidding me. He probably ate a few people's yearly bonuses and probably ate a few people too. That guy, I mean, if anything, those bankster people should be going to him, hey, you're not a good PR spokesperson. I mean, I'm hearing that farmers in France now are being penalized for growing too much food. So shouldn't we all be looking at that guy going, you're consuming too much. You're contributing to global warming. Stop consuming so much. No, I don't hear anybody say that. Anyway, our lives would be so much better. And of course, Milton Friedman completely agrees with this. If we could just get these damn central planners out of the economy and just let the public and the market dictate. What it probably means, though, is things like Bitcoin comes back down to the cost of production. Well, it's doing that anyway, isn't it? It probably means it was scary on our level 2 class. They're doing WD GAN right now. And we did a 50% retracement of the entire stock market, like the S&P 500, for example. And it's fascinating how that's what usually should happen in recessions. And it's fascinating how that level lines up perfectly with a huge gap on the price chart. And we all know what the statistical probability of gaps being filled in is. And that lines up really nicely with basically a test of the panic COVID lows. So, ironically enough, they're bringing the market down. And what I'm hearing is guys like I'm a big fan of guys like Stanley Druckenmiller, and he was like a year or so ago. He's saying like you're destroying our country. What are you doing, you assholes? And I get the impression that they got the message, because if you listen to fucking Chappelle recently, he's like the very first thing that comes out of his mouth is, Oh, inflation is way too high. We got to, number one priority, got to get inflation down. So clearly, the banksters got the message from people like Druckenmiller saying, "You're destroying the country, you stupid assholes." But what you actually may find end up happening is that the bankers just go too far, which is what they typically do because they're actually not very intelligent people. I mean, let's do a survey here. There's 40 people on YouTube watching this page, and I want an answer from every one of you. And I want this nice and clear so that people, when they watch this video later on, how did the feds, these banksters, crooks really, how did they do at forecasting both economic growth and inflation through that whole sickness? At any point were they correct in their analysis and their prediction of what was going to happen next? And this is a really, really easy answer, everyone. I want to wait for somebody to answer here because this is so important. I think you have to learn from this. I mean, it's common knowledge in the marketplace. Anybody who has any experience. Thank you, Adam. But I want everybody on YouTube, I want you to acknowledge this and understand this. Did they do a good job at telling us what was going to happen next? And the answer is 2 letters. They did a terrible job. Absolutely terrible. So why is it that people are looking at the Fed and saying, okay, tell us what's going to happen next? I mean, what bothers me, and of course you see how quickly Mr. Powell's hair went from salt and pepper to now he's fucking stark white like a ghost. And you look at his upper lip, man, he looks like he's 110 years old now. I get the distinct impression they knew exactly what was going to happen. They knew that this hyperinflation had to happen with the amount of money printing that's going on here. It was just a question of when. And so what I sort of suggested to this person in my replies to them is, I'm worried that the fix to this problem that Mr. Bernanke came up with in his grand wisdom, this was nothing more than a Band-Aid. It never actually fixed the problem. Because the problem is the banking industry and their necessity to drive profit margins. You look at Joey Diamond. Joey Diamond was responsible for probably half of that 2008 financial crisis. One guy. Has he changed at all? Do you think he's lending any less money? I don't think so. Do you think his shareholders are demanding more and more profits? Yes, I absolutely think so. And as long as he keeps the game going, he will keep getting richer and richer and richer through stock options and all that kind of fun stuff. And if I'm not mistaken, who's the guy who did the grand prediction about the 2008 crisis? And he was really famous in that movie, the Great Short, Burry or something like that. What was that guy's name? And he's come out and said, none of the problems that started this financial crisis, none of them have been actually resolved. Michael Burry. And oh, by the way, the situation now is actually 100 times worse than it was before. I mean, this is scary shit. All they did was they just put a Band-Aid on the problem. They didn't actually fix any problems. They bought time. And by basically printing their way out of this mess, which we showed you, that M2 money supply image. I don't know where the hell it is now. But that M2 money supply image I was showing you earlier, they just printed their way out of the problem. And the worst part about this is what really bugs me about this, right? Is Milton Friedman. You go and print a whole bunch of money, you increase the size of the economy, but you don't increase GDP at the same time. Well, you're going to get hyperinflation. I mean, it's not rocket science. And the problem is that people like Milton Friedman, who are sort of trying to keep these cocksuckers in check, they're all dead now. There are no people keeping these cocksuckers in line. There's idiots like me, but nobody listens to me. Well, I got 45 viewers. I mean, it's great for you, and I hope you all enjoy the edutainment. And I think some of you are actually learning. Where's our Great Del Moody dude? That guy, I swear, he's going to be richer than I am pretty soon, if he isn't already. But and I didn't need to say that. He's gonna do very, very well. Let's put it that way, because he has really applied himself. I'm so proud of that guy, and all of you TRIers. You know, like Grim here. We were joking before I got the video going. Grim's in the video call here. He's basically our level 1 instructor. There he is, big wave. Hey, dude. So proud of you. I mean, you tell me, Grim, do you think you're better served after listening to the Beamish for the past 5, 6, 7 years, whatever? Do you think you're better served than most of the people in your neighborhood stuff looking around?
190%. Absolutely.
Oh, that's good. Anyway. So you can listen to Mr. Burry. You can listen to the Beamish. I don't know. Beamish is colorful. I don't think that many people on YouTube swear as much as I do, but oh well. I'm passionate. Let's call it that. So anyway, the point of the matter here, right, is that all they did was they just bought them more time. That's all they did. They just bought time. And it's more kicking the can down the road. The fundamental problems here are not changing. You have to, if you want a strong economy and a strong society, governments have to spend less than what they bring in, not spend more than what they bring in. That's a potion for disaster, and that's the society that we live in now. And unfortunately, as Mr. Friedman pointed out, our latest sort of and the worst part about it is like 10, 20 years ago, we used to laugh at these countries. Look at Venezuela, those stupid idiots. Look at Zimbabwe and their magic internet printing. We're responsible financial people over here in the West. We would never let that happen. Wrong. And, I mean, the end result of all this is I've said repeatedly, and like I said, I find it very interesting that there is nobody saying boo about Bitcoin right now. Lots of people would be more than happy to string Do Kwon up by the testicles and burn him at the stake. Perfectly fine. Let's go after that cocksucker and just murder him. And the worst part about it is these humans, if that guy's not careful, he is going to end up dead. He probably should have a bodyguard on him watching him 24/7. But Bitcoin, I don't hear anybody saying anything about Bitcoin, which is fascinating because I've said all along, don't you find it awfully coincidental that literally at the moment of the U.S. housing crisis, which was the very end of the Bush tenure, and they came into office and they put into place like CIA funding programs that you can't even debate in Congress. They will go through whether you like it or not to the tune of tens of billions of dollars annually. I mean, talk about a sweet gig. And there's war on terror. How many? I think it said the final bill was something like $2 trillion. I mean, just staggering amounts of money. And then as the whole damn thing is collapsing, Mr. Bush Sr., who I think was actually in control of the whole damn thing from day one, he was, of course, previous director of the CIA. All of a sudden, 2008, mysteriously, this Bitcoin thing comes on the scene. And say anybody who wanted an out, they got their out by owning Bitcoin. And I mean, the TRI community, we've made some very, very wealthy individuals just because they bought this story. And of course, it doesn't necessarily have to be just TRIers. Lots of stories about guys in Well, I mean, all over the place. Getting rich, owning Bitcoins. So fuck you money. I think that's what they call it now. I do find it interesting that, of course, there's a lot of moaning and complaining. Yeah, I know, Andre. Yeah. Yeah. But there's a lot of moaning and complaining about Bitcoin price coming down now. But I mean, let's call a spade a spade. If you were told in 2008, 2009, 2010 that you ought to go and pick up 5, 10 G's worth of this Bitcoin that was trading at like $1 or around $1, I don't know. How are you feeling these days? Are you doing pretty good? Does it make any difference, real in reality, to you if the price of Bitcoin is 20,000 or 30,000 or 50,000 or 13,000 or 7,000? I mean, when you get up into those kind of dollars, it doesn't really make much of a difference in my eyes. And of course, are they ever going to sell them? No, because probably what they're going to do is they're going to collateralize them. And of course, that's exactly what the US banking industry wants. And I might even argue that that's probably going to be one of the outs for this great reset. Is they're going to make cryptocurrencies and all the do kwons and all those idiots, they're going to make those things worthless. And then they're going to say something like, you have to register, if you own Bitcoins, you have to register them with some sort of central reporting agency. And you have to, especially if you're a US citizen, you have to own them on some sort of approved exchange. And then those exchanges, of course, are part of the Federal Reserve System. And so they have to basically pay homage to whatever the Federal Reserve System is. And my hunch is that they're actually going to use Bitcoins as a way to continue the US dollar hegemony. Makes sense to me. So it's fascinating to watch this whole story play out. What I would say is I don't think that the 1% is even the slightest bit worried about losing control. What I'm most worried about is the Benner cycle supposed to be 22 and 23. So I'm just worried, like if we look at any long-term Bitcoin chart, right? And that's really supposed to be the bent of our conversations here. What I'm worried about for you guys is well, I mean, there's two of them. The cost of production model, I think, is sort of your base value. But this is sort of our fun little sort of, cycles, what part of the cycle we're in, what's typical duration. And now, the cool thing about Bitcoin is we have 3 complete cycles now to work with. So we get a pretty good idea of what this path ought to look like. Now, obviously, history never repeats itself, but it often rhymes. So I'm just worried that you see that, this is a fun little study that Andrew and actually a guy named, I think is another Andrew, the two of them. One of them, I think it was sort of his kind of idea, and then the other gentleman really liked the idea, and he personified it. And in our day trader room, they gave me sort of a lecture on how this sort of time series works. I'm not going to go into all that. All I'm going to simply say is it's pretty darn good at predicting these cycle peaks. But for the purposes of our conversation now, it's also very good at predicting these cycle troughs. And unfortunately, you can see that the sort of the front side, where the sort of the beginning of the bottoming cycle comes in, that's September this fall, which actually I do kind of like as a window. And then coming out the backside of this cycle peak is May of next year, 23, halfway through 23. So sadly, what I've been trying to suggest to people is I wouldn't be in a big hurry for now the next probably about a year. We still just got to cool our jets and just wait for this 4-year cycle to finish playing itself out. It sucks. I mean, it sucks having, running this business. I've now, Julian and I started this business right here. And you can see this particular cycle. Like I said, the numbers, ironically enough, are very, very similar from cycle to cycle. So actually, I'd be curious. Let's see. Was there a happening before November? No, okay, so first question, was there a happening on the 19th of November 2012? Let's see if we can get consensus on that. And actually, probably this isn't the best. November 26th? That's what you're telling me? I'll move this up a bit. 26 there. All right. And I'm actually thinking to do this chart correctly, we should be using one that has a bit more data. We need the, what is it, BLX? I think that's what it is. Brave Liquid Coin. I think, yeah, this one has more data, doesn't it? There we go. And go all the way to 2011. All right. So I need you guys to spit out happening dates, and we'll do one for this particular cycle and see if it helped it. Nice language it did. Oh, this one doesn't go that far back either. Oh, shit. Darn. Don't we have one that goes back into 2008? Was this the first happening? This November 2012? Does anybody know off the top of their head? Was there one before that? This is the first one? Yeah, well, that kind of makes that a little difficult. I was going to try and see if we had one. 12th was the first. Yeah. Well, I suppose the inception day is probably the way to go. The only problem is that I think that it was trading back in 2008, 2009, wasn't it? So we don't have the data there. All right. Well, anyway, forget that conversation then. I'll get rid of that. Okay. So Julian and I started our business right here. And, the irony of it all is I even remember this specifically. I told all these guys when I first started this that usually typical bear market is a year and a half in duration, 18 months. So 18 times 4 is 40, 72. Is that right? I think it's something around there. So 72 bars is right there. Not bad for calling a bottom, eh? Right in there. I remember that was one of the very first things that I told the sort of TradingView crew that we started working with was typical bear market is a year and a half. That's pretty normal. So that hasn't changed. And what I find interesting about Bitcoin is it sure likes to just do like a straight line for 1 year, just break all the crypto kids' hearts. And then, of course, 78.6 is, how much Brian loves that number. Reload zones, Wyckoff checks are the old breakout highs. I mean, it's all very, very cliche. So, if we fast forward to today, there is the old breakout high Wyckoff check kind of idea. So that's already happened. 78.6 looks like it's a little bit, actually, maybe we hit that on that big dump day there. So, Brian would just simply say, if you can put yourself on a dollar cost averaging plan, and you're just going to buy once every few months, all right, once we're in this reload zone, that's fine by me. I had in no way of knowing what this looks like, but my hunch is it probably looks something like that. That's pretty normal. So, with that kind of image, do we really want to be too bearish of Bitcoin right here? I don't actually think so. I think that's kind of asking for trouble. What I wouldn't be surprised is last cycle, we kind of played this funny game where it was correcting and then, woo, get me out of there. And correcting, well, get me out of there. And then correct. Oh, get me out of there. And then correct. Get me out of there. And you notice smaller and smaller and smaller. And then eventually, this is what I'm worried about. Remember, I had said earlier that this new cycle, its bottom is September. And you notice this particular 1.618, which I drew off of. Actually, let's do this one there. There. Where is the next? Okay. I'm confused. This was a happening, right? No. July 16, was that a happening? I can't remember. Oh, yeah, there it is. There's my little icon. Sorry about that. A little bit of a brain fart for you. Okay, so let's go this line. That's the line I wanted. Okay, where is it? Where are you? There you are. Okay, so there. There. All right. So remember I'd said that little band? Look how that called that top perfectly. So, when, very simply put, when you get into these happening windows, right? One happening event to the next happening event. When you get to about 30 to 40% of that time window into the new cycle, you better fucking start ringing the register. I mean, it's ridiculous how consistent that is. So that's that cycle. And if we fast forward to the next cycle, and the interesting thing about this is no two cycles are exactly the same, right? So they're not going to be exact replications. You got to adjust, right? So there's that one. And sure enough, look at that top. Incredible, right? So super cool study the boys found. So based on this cycle and that top, you notice that there is that trough, the end of September. That's actually when I would expect that the bottoming process begins in earnest. Maybe something like that. Could there be a bit of back and forth here right now? The problem is, geez, there's just nothing to work with there, right? I mean, you had the potential. Actually, level oneers are just doing this right now. So you see last week, we had the potential for an inside bar reversal. And I think, I think I did a video off of this as well, but I think it was off of this one. But inside bar there. Turns out that even though baby's feet are outside of mommy's body, I think we still have to think harami, even though I would call that a bull rammy. Long and short of it, off of this, if we had to move through that 21.868, then that would have been a buy signal. Nice inside bar reversal there. And you level oneers, you're going to be doing this week. So, another easy way for you to see this is, and this is what I think all of you guys should do. Actually, I'm just blabbing away here. I should try and go back to the questions. But if you add the Williams fractal tool, you see there it is. There is the 3-bar fractal. Boom, boom, boom. So it didn't fire. So as a result, there is no signal. And you can see prices drifting back down. Now we've broken through the bottom of this inside bar. So I actually think that signal is off the table now for the time being. So as it stands right now, there just isn't any sign of a bottom here yet. It's just in drift mode. And, the problem here, of course, is you've got this pretty darn powerful harmonic, right? A, B, C, D. Why wouldn't the market trade to that? Then, of course, we talk about the value shelf, right? Probably odds are market's going to smack right off of that value shelf and bounce up. We also have the previous Wyckoff check breakout. This, what I try to tell you guys is hunt for weekly W's. I might even argue that this is a monthly W. Oh boy. That means that you buy there and you risk down to here. There's your risk window on a monthly basis. And then the question ultimately is, can you see a 2-to-1 risk reward? I'm going to buy that W. I'm going to risk against these lows. Did I get my 2 to 1? Well, there's 2 to 1 right there. That was on that spike there. Interesting if you do fogging bombs, right? Foggy buggies would say, well, probably going to shoot up to that 4669. That's usually a pretty good level. And I remember distinctly Kevin Kavarkanator. Sure, I haven't heard from him in a while. I hope he's doing well in life. He repeatedly was barking about this $50,000 price target. And I remember running up. We're going, oh, that's crazy. End of the sky. Oh, yeah, man. Or pie in the sky. Oh, what a trade. But that's actually a pretty darn good trade, 2.67. Interesting, 2.618. If you had, I wonder what would happen if you got into the habit of setting your profit objective at 2.618 risk reward. I wonder if that would work. That is 2.618. That's the number we kind of like. Anyway, point is that's the trade. But if that's the case, then what this really means is if you bought this breakout here, then you have to be able to risk all the way back down to these lows. That's the W. You see it, it's huge. My hunch is this is probably going to be a huge battle point. And actually, even Grim was mentioning this to the level oneers when we talk about trading. I remember when I first started in this back in the 1980s, I used to work with a guy named Ken Roberts. And he actually started when I first worked with him in his newsletter. And it's so funny listening to newsletter writers. They always change their story over time. There actually is kind of a funny story. There's a gentleman on YouTube who does a nice video series. And I really like his video series because it's really, really simple. And I have to say, listening to sort of his 4 or 5 rules that he uses to frame his day trading. If you fancy yourself a day trader, I think this is required watching, and I think I'll probably throw it in the day trader lounge with the boys tomorrow morning. Keep it really, really simple. Just really dumb it down. Just really, really simple rules. Yeah. Well, I mean, yeah, I could, no doubt. I could definitely throw it in the library. And it's interesting. One of his recent videos, I remember what is a balding, fat, middle-aged guy do on the weekends because he doesn't have any women in his life. He sits and watches trading videos. But one of his video series that he did, he's done a bunch of these videos. I mean, I don't like this shill. You know me. I don't like all that kind of stuff. But he's even said he lost so much money. Brian, I'm taking you to a speed dating event. Okay. I'm not sure what the hell that's in reference to. But anyway, he did one video series up, not this one, a different one, where he tried to day trade. He tried to learn how to day trade and using automated trading services. And it was actually a really educational. I've never heard of anybody who's built a black box that works. And indeed, he tried to build a black box, algo trading, all that, and he lost quite a bit of money. And not only did he lose quite a bit of money from the trading, but he also had to pay a lot of money in fees to these various platforms. And that's what scares me about a lot of these platforms. Like I know a lot of guys on the site are really getting going about Sierra charts. And I'm like, okay, well, are you trading live money? And they're like, no. But I'm like, but you have to pay $70 a month fee for the service. And they're like, yeah, it's no big deal. That's not a potion for success, people. You have to, the number one way that almost all small business, 50 years of this stupid game, the number one way that almost all small businesses fail I've seen in our society is they spend their way out of business. So there's a reason why Brian is a cheap ass. I may come across as stingy, scroogey, Don't want to spend a lot of money, but there's a reason, because I want to stay in business. And what usually ends up happening is, holy moly, somebody's putting down Adventure Adam has written a soliloquy here. So, all right. I thought it was a really interesting video that he did on trying out this automated trading platform and subscribing to this service that said, yeah, we do a black box, and yeah, it's really easy to make lots of money, and all you got to do is just turn the machine on and away you go. Not so. And he had to learn very hard. Like, he lost like about, I don't know, $3,000 or $4,000 trying to learn. But that's not the point of this. The point of this particular reference here is he actually, after a long time, actually distilled his day trading process and sort of the keys to his success in this video. It's only about 10 minutes long. I think it's worth its weight in gold. Really, really good video. I tweeted it out. I'll throw it in the lounge, and as Josh says, we can throw it in the library later on. I think everybody on the site should watch that. And really, I don't know whether you guys, probably none of you on the public who are watching this, but definitely you guys on the site. And I think actually Josh and Chris are starting to do these little tidbits. I don't know whether you guys see, my day trading approach is actually extremely simple. I look at a higher time frame chart and I just want to see levels. Then I drill down to a lower time frame chart and add said levels. I want to see signs of divergence. And then I want to see price structure. And I personally like to trade the futures products. I do like, and that's basically what he's talking about. I mean, again, 3-step setup, keep it as simple as possible. Don't overthink this shit. One added feature, he likes to trade stock options. And one added feature he's thrown into his mix is the relative performance, which, frankly speaking, I think is very smart. And if you do trade stocks, I don't personally like to day trade stocks, and there's a whole bunch of tax rules, especially for you down in the States. You got to be careful about when day trading stock accounts and stuff. I personally like to, if I was going to day trade, I'd rather trade a structured product like a futures product. Keeps it really, really simple, and there's none of those issues. So, point here is, thought it was very good. Keep it simple, stupid. Don't overthink this stuff. And as I said, I'll be more than happy to add that to the library. Not quite sure. There was another reason why I mentioned this guy. But anyway, I did notice, I think Eddie, he seems to like him. And actually, we got a thanks back from it, Daniel. I got to say, Daniel, I was very impressed. And a lot of YouTubers don't impress me. So I was very impressed at his candor about going through the automated system and finding out that there is no such thing as a free lunch in this world. It just doesn't work that way. And if anything, Josh right now, he is going through the process that actually I'd like to see everybody do with regard to using the website. Is he's taking the breadth indicator information, which I think is a perfect sort of another reason to justify taking a trade. And then he's just trading setups in the same direction as whatever the breadth indicator is suggesting. And it's like, well, que bella. That's perfect. It's exactly what I want to hear. And you know what the key to actually making money at this stupid game of trading is? It drives you crazy. And he talks about it too. You're just not going to be right all the time. It sucks. It is the brutal fact of this game called trading. You are trading against a whole bunch of other humans, which means that you're really trading emotion, you're trading opinion, you're trading nuance, human psychology. There's no such thing as a textbook scenario. And I remember a guy that I used to work with over at Top Step. Who was that? It was Dr. Menaker, I think he used to always say. You're never going to find two situations in the marketplace that are exactly the same. It just doesn't happen. There's always some sort of variable that's slightly different. So as a result, half of your job as a trader is just to set yourself up that you don't have to be right. That's not the point of this exercise. The only way that you can do that is have to accept the fact that you are going to be wrong and that you are going to take losses. But something has to happen when you are right. And this, of course, is what undermines most people in this game of trading, is that they're more concerned about being right. So they'll take a very small win just to show that they were right. And then they have to go take a horrendously large loss because they wouldn't accept the fact that they were going to be wrong. And holy fuck, at the end of the day, I better cover this or I'm going to lose my account. And yeah, boom, there you go. Nice big fat loss. Merry Christmas. So, again, a really good sort of keep it simple, stupid approach to trading. I really like this kind of information. I like this information sharing as well. I've told you guys repeatedly, there's no secret to this damn game. And if you're going to come to TRI, of course, we build tools that are going to help you see the market and understand when it is appropriate to take a risk and when it isn't appropriate. But at the end of the day, you know what actually is the most important damn thing? It's setting up that plan so that when you're in the trenches, you know what you were looking for. You know what your setup that actually appeals to you. Some people are volatility traders like Bollinger. You try and show a money flow analysis chart to John Bollinger, and he'll be like, I don't know what the fuck that is. Get that out of my face. He's a volatility guy. That's what Bollinger Bands are. Other people, they trade strictly off of fundamentals, right? Don't show me a price chart. That'll make me sick to my stomach. It's not our job to tell you what is the right way and the wrong way to trade. That's not our job here at TRI. Our job is to, and this is the way I've described it, and I love describing it this way because I think it makes perfect sense. Our job, sorry, bit of a runny nose. Our job is to show you the table, and we're having dinner with the queen. So that means there's 5 different forks and 7 different goblets to drink from. And there's 4 different knives. And you better not use the wrong knife or you will be ostracized. How's that for my, that's terrible. I think that was a British accent. Not quite sure. I love Queen Brian. Oh, Queen Brian? Is that what that is? I'm Queen Brian. Josh says that's horrible. You know what that sounded like? That sounded like a Canadian trying to be British. Mind the gap, dear. Anyway, I sound like my grandma. There you go. Well, that's what I was going for. So score. Right on. Anyway, the point is that there are 20 different forks you can use. There's 5 different knives. There's 6 different spoons. There's 7 different cups to drink out of. Do you know how to use each of them? Do you even know which is used for which type of food? And our job is just to show you, okay, here's the seat. You sit like this. Okay, take the napkin, put it on your lap, right? You don't want to get food all over the place. Thanks, BT. And at the end of all of this, if you're like, Brian, I like eating my steak with a shrimp fork, it's just who I am. This is the trades that I took. This is my 2/3 accuracy. This is my 2-to-1 risk reward ratio. This is my account balance, substantially higher. And this is the way I trade. Then I go, congratulations, you are there. But just getting you from turning on the TV, oh, this guy says I got to buy this stock because it's a shoe-in, no-brainer buy, to, well, I'm going to buy this stock because of this reason, and I'm going to place my risk here. I'm going to risk this amount of my portfolio on the trade. I'm going to place open orders to take profits at this level, and this level. And I just pulled the trigger. I'm long. Let's see what happens. That's a huge difference. It's just apples and oranges. It's night and day. Cliche, cliche, cliche. So really, our primary objective, and we have 3 different levels of this. Keep in mind, and this is not an exhaustive school program, but 36 different modules on how you actually trade, right? There's level 1. And the cool part about it is the level 2, this is actually where we start getting into the really cool tools. Level 1 program, a big part of it is just doing nothing more than teaching you how to actually plan. Yeah, keep in mind, and this is the interesting thing. I find this fascinating. And nobody teaches anybody anywhere. Nowhere. I've never seen it anywhere. Nobody teaches the rules of the game. How do you take an appropriate risk? How do you quantify why it is you're doing what you're doing? How do you articulate what a setup is? How many criteria should be in a setup? Okay, well, if you're going to take a risk, what type of risk taker are you? Are you more on the conservative side? Are you really aggressive? What kind of products are you interested in? No, but I don't see anybody anywhere teach the rules of the game. Even our fun guy here, right? Our fun guy here, he's all about day trading and awesome. And like I said, I think he's excellent, valuable information, but he doesn't teach you about how to build a plan. He doesn't teach you about how to articulate what it is that you're doing, where you're going, how you're going to get there. I find it fascinating how nobody in the industry actually does this. Everybody teaches you, follow my trading technique, you'll make $1 million. So anyway, that particular gentleman, he doesn't even want to be invested in anything at the end of the day. 100% cash by the end of the day. So it just goes to show there's a million different ways to skin a cat. You listen to some of those silly social media doofuses in DeFi land where they say, well, you shouldn't even sell half on a double. In fact, when it doubles, you should buy more. I don't necessarily agree with that risk management strategy, but it just goes to show how completely polar opposite people can be in the marketplace. I don't actually think there is a right or wrong. Little old ladies, you want to buy and hold? Fine. We can set up a risk management model for those people. You want to be a day trader and you want to flip futures contracts, and by definition, you have to be out by the end of the day and in 100% cash? Fine. We can build a trading plan around that as well. But I guess, what's that? Somebody has a fun joke here. I just did zip by. That's what the banker said about his diet. When it doubles, eat more. Oh, God. I'm telling you, somebody should go to those banksters and say, this is not a good PR guy for you to be showing to the public as a quote unquote banker. I mean, that you're not doing yourself any favors. Oh, well. I got to blow my schnoz. I'm going to put myself on mute. Hold on. And you're absolutely right, BT. BT over there on YouTube says that Wells Fargo advisors do not like hearing any of this. And you're absolutely right. If you actually leave it up to the banks, and in my country it's even worse, is what you're supposed to do is, as a good Canadian, you're supposed to go at the time of year when you're supposed to invest. You're supposed to literally go to your bank teller. And now I don't even think they even have that. And you're just supposed to say, okay, well, what am I supposed to invest in? And they tell you what to invest in. And of course, it's some crazy bank mutual fund product that has just a ridiculous kickback for all the fucking bank insiders. It's the way this has worked since the first day I've been in this business. Nothing has changed. It's all the biggest fucking shill scam you've ever seen. And ironically enough, it's in the bank's interest and it's in everybody's interest that the public actually is as uneducated as possible, which is sad. Because uneducated people, they say, well, what am I supposed to do? And then the bank says, well, Mr. Customer, this is what we advise. And since you have your bank accounts here, and you have your mortgage here, and you have your insurance here. We're going to tide sell you. If you don't buy your products here, we're going to punish you over there. Oh, well, I guess I better do what I'm told. Boom. So sad. I mean, remember, I worked inside the industry for more than 20 years. So I know the industry backwards, and nobody can tell me I'm incorrect about that. It's a secret little secret you're not supposed to know about this whole concept called tide selling. But we won't get into that today. Okay, rant. Hope you guys enjoyed that. I don't know whether I gave you any value today or not. I know I'm supposed to. Tide pod selling. Sort of. Supposed to talk about questions you guys have. I just didn't really see too many questions. So I didn't spend too much time on this, but I'll spend maybe a half hour, 45 minutes on these few questions, and then we'll wind it up and call it a day. And if you guys have any specific questions over there on YouTube, I know there's a good 40, 50 people over there. I can always answer them as well. Let's see. Shanta Racer, sir, please give your thoughts on crypto future trading and leverage risk. It's safe or not? Please share your experience. Thanks. I think it's generally, I mean, what's the definition of safe? We used to always say, you want something guaranteed, I'll show you 3%. Hell, you can't even see that now. So there's nothing guaranteed in this business. Could these central planners come along and knock the purchasing power of your currency down by another 20, 30% here over the next year? Absolutely. So what's safe? I think it's a good idea that if you're going to go on these current cryptocurrency platforms, that you only put the amount of money on the platform needed to facilitate the trade. So let's say you got 100 G's and you're like, oh, I want to try futures trading. First and foremost, I would absolutely say you should do 100 paper trades using that platform's data, just to make darn sure, number one, you know how to trade setups, and I don't know whether you do or not. If you do know how to trade setups and you have been playing this game a while, you're going to have to get used to the nuances of every exchange. So at the very least, if you are an experienced trader, you understand risk management, you understand trading setups, you understand the nuances of trading exchanges, then the very least, what I ask all of my traders is to do the 20-20 rule. And that just simply means that you're going to come in. I guess this, no, so I guess it's this one. Yeah, so, everybody who starts our program and our education program, you're a baby and 100 paper trades. No excuses. Don't bullshit me. Don't waste my time. If you don't want to do this, fine. You can flounder. I mean, I know one guy who basically for the past 8 years has fought us tooth and nail on learning the process. And even now, hopefully, I think maybe we've got him to commit to a journaling plan. We're going to call it, and anybody who's a TRI member who's on the site, we're calling it the Transparency Pact. And just as for myself, I don't really need to worry too much about learning how to journal or what I have to do to journal and behavioral controls. But for demonstration purposes, basically the pact is we all, a lot of us day trade on the site. So, pre New York Open, it's like 4 or 5 o'clock in the morning for me. I do the daily brief at about 9 o'clock my time. So that period from about 5 to 9 is about 3 or 4 hours. That's my day trading window. And our pact is that by the time we do the day trade report or the daily brief report, that we will have a journal entry logged with whatever activity we did in the morning, and owning up to how we're feeling. owning up to what we're seeing in the marketplace, whatever trades. And keep in mind, not taking a trade is a trade unto itself. And the gentleman that I referred to earlier, I think the biggest thing that he has to learn is just simply to not trade if he doesn't see his setup. And a lot of times he doesn't see his setup, and yet I still see that he's forcing because, people are asking me, what's going to happen? What's going to happen? And he's sort of like backed into a corner that he has to make predictions. And we're not supposed to be in the business of making predictions, people. I'm not, half the time, you guys watch that Wednesday show. This is a great part about that. Hopefully my participants, Paul, perfectly example, he's terrible at making predictions. And yet he's totally killing it as a trader. Why? Because he even says, trade your setups, put your opinions away. They're worthless. It's beautiful. But anyway, the point of the matter here is we just started this up. And I would like to see my show director here on the site has joined the pact. A few people in our day trading room have joined the pact, because if you're really serious about this shit, no bullshit. Stop with the bullshit. You have to do this right, and you have to follow the process. And a lot of times it means doing a lot of fucking work, right? You got to pull the chart up. You have to explain why it is location wise you took the trade. You have to explain, what are your 3 reasons? Of course, I'm that big fan of the 3-step setup. So, at trade location, incomes bullish divergence. There's price structure. Willie's stupid. I got to go. And the irony of it all is that the trade actually worked out quite nicely. So go figure. Point here is that you just got to do this every fucking day. Every day. This is, a lot of people joke that the day trader's life's so easy, right? You just pop on, pop off, you're done. No, actually, day trader life, it's a lot of work, and you have to have the patience and discipline that if this location didn't come in, if this divergence didn't come in, if this price structure didn't come in, well, then you fucking do nothing. And it takes, as Josh says here, it takes a lot of time. So anyway, back to our story. Somebody's asking me, what do I think about actually futures trading? I don't really mind the platform, but like I said, what I think is more important is you got to be able to have yourself down. Now, if you know trading plans, if you know risk management, okay, awesome. Well, what I suggest, and this is what I tell all people that are relatively educated to come to me, do your 2020. And that's 20 trades on paper on your particular futures, or I think they're mostly just forwards contracts, trading platform, fine. Then 21 1/10 account size trades. Now, the first 20 trades, this is going to do nothing more than just make sure you're not making mistakes, make sure that you understand the order entry process. And if you're sitting here going, oh, well, Brian, I never make mistakes, fuck you. I mean, everybody makes mistakes. It's terrible. And in fact, including myself, right? And in fact, in our library, and I think this is probably one thing that I'd like to see all of our new members to the community get working on. Although I don't really drive it home until you get to the level 3 program, because level 1 program, you're so overwhelmed with information as it is. But look how many different ways you can fuck up a trade here. So don't tell me you don't make mistakes. Everybody makes mistakes. So the point here is the 2020 exercise is just to see, am I actually doing what I'm supposed to be doing, or am I maybe making mistakes and I got to reset the clock? And every time you make a mistake, by the way, you got to reset this back to 1. And you got to show me another 20 trades and no mistakes. And, me, myself, I was a prop trader. I did it for a very long time. Then I came and dabbled in crypto and, of course, silly altcoins. I was also a penny stockbroker, and I made lots of money in penny stocks over the years as well. And that's the one thing about venture capital that spoils you a little bit, is that, in a futures trade, maybe crude goes from 95 to 96, a full dollar move. Woo! Right? Well, okay, great. $10 a point. That's $1,000 a contract. Great trade. You've seen some of these funny little altcoins. They can go 100x. You take $1,000 and all of a sudden you got 100 G's. I mean, that's half the reason why I get involved in venture capital, because it's so much fun. and you can make a lot of money really quickly. But in bear markets, you better leave the fucking market alone. That's the kind of market that we're in right now. So as a result, I'm doing most of my activities in futures trading. So to answer your question specifically, sir, I would suggest you go about this process. And by the time you get these 40 trades done, 20 paper, can I actually trade setups? And if you can, and you're not making any mistakes, move on to actually risking real money. Now, what you're going to find is when you do start risking real money, the psychology in your brain starts to change. Can you replicate the paper trading experience with actually seeing real dollar figures going up and down and the screen shifting from making money to losing money to making money to losing money? A lot of people can't handle that. So that's why I suggest you start at 1/10 account size trades. Show me 20 trades that you can do that and you can handle the psychology of it. Then I think you're ready to just get to work. And as I said earlier, I don't think it's a good idea to have too much money on any of these exchanges in crypto land at all. The rules of the game can be changed instantly. And I see that, the central planners, central bankers, whatever the hell you want to call them, they are in the process of changing the rules right now. So don't be married to any one particular site because, like Trex, for example, just they had me jump through a whole shitload of hurdles to make sure that I was legal and KYC and the whole damn thing. And then a month or so ago, they just said, oh, by the way, we're kicking all Canadians off of the exchange. Fuck you. So it's sort of like, that's crypto for you. It's unregulated. Frankly speaking, I'm actually surprised BitterX Bill didn't steal my money. I was actually fully expecting to one day to wake up and find out the place was gone and the whole fucking joke was a fraud to begin with and to end with. No, actually, they're trying to keep above water, but they're trying to excommunicate all non-Americans, I guess. I have no fucking clue. I will say, if somebody ever asked me as a reference, Brian, would you suggest trading on BitterX? I'd say no. And unfortunately, a lot of people learned that Trex was a bit of a trap. Oh, well, it is what it is. So are you going to go and trust these exchanges with money that really is at risk and it's not part of your futures? I wouldn't do it. I think that's asking for trouble. In crypto, of course, there's one expression that really describes everything about crypto, and it's not your keys, not your coins. So if you're going to keep money on these centralized exchanges, understand it could go poof, gone. And really the only way that you can absolutely ensure that your crypto is your crypto is if you get the key for your coins and you put it on some sort of cold storage wallet completely off of the exchange. And then for certain your shit's not going anywhere. It will be interesting to see down the road whether I believe that they will probably do things like Bitcoin FDIC insurance. And especially with what Mr. Do Kwon did there, I absolutely think that stable coins, quote unquote, will have to follow money market regulations. Absolutely, without a shadow of a doubt, I know that's coming. So it's going to be, if anything, this should be a really good washout period for things like DeFi, totally clean up the space. And, the next cycle starts 2024. So you want to go and make those 100Xs on crypto? I think you're probably going to have to wait a year or two. So I don't know. I hope all that stuff helps answer that question. Okay, next one up. A lot of 9/11 war veterans are retiring with huge retirement pensions and disability income. I don't know how much they make up the market, but I feel has an impact. Yeah, well, it wouldn't surprise me. You know what I'm seeing dollar menu is a lot of retirees. All the baby boomers are retiring. They're on fixed pensions, a lot of them government. So how does the government actually pay those? And this is the tragedy. You could have a guy who figures that he's going to have a pretty darn good retirement income on a pension and it's fixed. And then all of a sudden they go and inflate the economy. You get 3 or 4 years of double-digit inflation. And now his pension doesn't even cover the price of cat food. So these, if anything, all the baby boomers were suckered, and military vets, and everybody in that generation was suckered into this. Well, the pension will pay for your retirement. Just work your ass off your entire life, pay into the pension, and you're fine. What a joke. They go and inflate the economy 2-3x, and now all of a sudden that income, that pension income that would have given you a very comfortable life in retirement 10-20 years ago doesn't even pay for your basic necessities. I mean, it's that this is back to, this was, I think, the crime of the millennium. The problem is the millennium just started. I mean, it's like literally, as I said in this tweet, this is literally a whole generation's of a whole generation's wealth was literally stolen. And the way that it's going to be expressed is through inflation. But literally a whole generation's of working their asses off and expecting to retire in a very comfortable means, i.e., in Canada, we have Canada Pension Plan. We have something called old age security. None of those are going to change, even though for some stupid reason, my leader of my country believes that, well, if the price of a house just doubles, well, so what? Who cares? And the worst part about this is that all the local governments are in on this. Because if the price of your house doubles, what does that mean for your property taxes? It means that your property taxes are going to double too. So the local government's like, fucking A, man, cha-ching. It's like a perfect crime. This entire generation is getting fucked up the ass. It's remarkable. Absolutely remarkable. And they're all going to be fucking living on cat food by the end of this. It's unconscionable, really. And you wonder why civil wars happen. You wonder why. All right, got off on a tangent there. Sorry about that. Okay, Bush Sr. was in Dallas. Yep. Hinckley was family friends. Yep. Read the Franklin cover-up by DeCamp. One of the attorneys of the couple of the victims tells you all you need to know about that fam. Or watch his interviews. Buffett was mentioned in his book Over. Okay. Cost of production today is $34K. If you Google it, I think that's a total load of horseshit. And I think that what ends up happening, and the Glass Node guys kind of did this the other day recently as well. I think what ends up happening right now with the Glass Node guys is they're saying that if you take all of the miners, everybody, that cost of production's up here. But the thing is that I think you're going to find that the people that are mining Bitcoin up here at 20, 30,000, they're just going to end up just simply turning their machines off. And what eventually happens is the people with the most powerful, most up-to-date equipment are the ones that survive. And I believe Colonel Mustard did it in the drawing room with the candlestick. No, that's not what I believe. I believe that, and I've shown you guys this repeatedly, I don't even know if this is the most updated. I think there's probably equipment that's even better than this now. But I believe that the S17s and the S19s are probably our industry reference. And if they still have the same electrical costs that they had back when we last did this study back in like the pre-COVID, then I think that their cost of productions are sitting down around, this guy's here at about 8,000, 7,500, 8,000, and this guy's around 10, 11,000. I think that those are your base prices. And that's assuming that the S19 is the finished. My hunch is there's probably another version like the S21 that even has an even lower cost of production that we don't even know about yet, but it's coming down the pike. So anyway, the point that I would just say is that I understand the glass node guys are kind of like, well, cost of production up in this area, but I think that's an average of everybody. And really, I think that the only time when you can really start to seriously think about a bottom and okay, who is still left alive is when we start to hear talks about the 51% attack. So whoever made reference to that, that was Mr. Loris Bello. I think what you really want to juxtapose cost of production with is 51% attack. So has anybody heard any talk about anybody being able to pull off a 51% attack? Pretty easy. No. So I don't think we're anywhere near a bottom yet. Okay. End of the year also often bad because of tax loss selling. That's true. M crypto M. It exacerbates itself. And what do you think? Are there going to be a few people booking some capital losses on things like Luna this year? How about the other DeFi names? Do you think the capital loss farming is going to be just over the top? I do think so. So with the market being as weak as possible into the end of the year, I like that scenario. And then Cotter here. Cotter will, this is Cotter's number right here. He will fight me on this cost of production number tooth and nail. And then which is fine. But what I love to remind Cotter is there's a publicly traded company that's come out and said that they have a $3,000 cost of production for Bitcoin. Now let's see what Cotter says to that. This is an ongoing, let's call it a conversation that he and I have been having on this site. What I would simply say, again, going back to our previous conversation, is show me this window, right? That 1.618 to 1.786 window from the fib time horizon. And my hunch is in the middle of that window, you are going to find your big fat weekly value level on Bitcoins. So there it is there. And it turns out this one came in at about $4,200. And in this particular cycle, you can see, I won't change well, I guess we can quickly do it. I'm just really bad at this. Is that it? Is that it? No, that doesn't look right. Oh, that's 38.2. Where's 1.0? There it is. Yeah, so there to there. Nope, still got it wrong. Oh, we couldn't do this one, right? Because we didn't have the previous date. Anyway, since we know, where's 1.0? There's 1.0. Since we know that the market likes to top into that window, and we know that 1.0 should be off of the halvening. Why on earth do I have this so low here? Interesting to see if this lines up to like 2008. But we know that that should be there. And then that means this should be there. So, like I said, it'd be really interesting to be able to go back and see what date this is here. But there again, and actually that's interesting. If we do that, and you notice 1.618, I remember when I first did this, 1.618 seemed to come in somewhere right around here, 78.6 there. So again, because this one doesn't have a starting reference, I don't know how to do this. I'm just sort of doing this out my butt. But that shows 1.618 there. No, it's got to be longer than that. Be interesting to see. Like, if I understand it correctly. Yeah, it's kind of skewed, isn't it? Well, here's all I'm just going to say here for this. I don't know about this study on this. Is there's your weekly W. That came in at about a 300, and notice the bottom was 150. So that's probably important reference. Like literally, the bottom came in at about double whatever the bottom, the actual low was. So if we apply the same sort of logic to the next cycle, the low was 3,000, somewhere in that area, 3,100. Breakout high was 4,200. So that's about 50%. So you can pretty much, it sounds like, see that whatever this bottom W is, it's probably going to be like a panic low dump. And then like literally the price either jumps like 50% or maybe even doubles. As we go about that process of doubling or double bottoming. Yeah, I think that's what I want to say. So, maybe we dip down here in like 13,000, then jackknife all the way back up to 20,000. Could easily see that. That would be sort of along those lines. 88.6, which was the actual ultimate low off of this one. You see 2,300. Actually, we didn't even get down into that number. So 88.6 off of here is 10,000. Did we get down to 88.6 on this one? Can't remember. 88.6 was sitting at 130 and change. And we got down to this low, it's like 150 or something. 152. So it didn't quite get down to 88.6. So I'd say on balance, I think the odds are we probably bottom somewhere just above this 88.6, somewhere in that area, and then go about carving out our W. And if we use this cycle, again, a little suspect, but nonetheless, sort of a work in progress, I guess we'll call it. Go there. And then 1.0 is, there it is there. To there. Something like that. That gives us the window for it to happen. Like I said, there's September. So I do like the idea. And the good part about it, hey, it's July. So August, September, it's like 2 months away. We're finally, I would say we're probably in the last 6 months of whatever this shit is. And we end up going about bottoming into the end of the year kind of idea. Then we'll probably go sideways through this window. Once we get outside this 786 over here, and we actually start thinking about the next halving event, then I think the new cycle is on us. And as we sort of pointed out, that's like next May. So, shit into the end of the year. Tons of tax loss selling. Makes perfect sense. Maybe if we're lucky, we get a nice little dead cat bounce here through the summer. We are technically in a buying window. I don't think this is the start of a new bull run. But, maybe we're a little bit oversold here in the short term. If we go down to like a daily chart on here, you can see they're putting up a hell of a fight down here. Nice little potential W coming in. And I kind of, especially with the fact with the dashboard looking the way that it is, kind of want us to see a little bit more bullish information out of the market right now before we can go, all right, time to get uber bull. So we go Brad. I was a little concerned. We did see a breakdown there in the crypto top 30. A little bit of a bounce. Yesterday wasn't so bad. Remember, we were seeing kind of those bottomy type action there in Bitcoin. I also saw Ethereum was trying to bottom out as well. I think I talked to you guys about that right at the beginning of the video here today. That was that. That's the Bitcoin. Oh, look at that. We jumped up nicely there. Where's ETH? I could have sworn I had ETH on here too. What did I do with you, Mr. ETH? I know you're around there somewhere. www.eth.com. There it is. Oh, hello. Hey, you son of a bitch. Now, just be a little careful here, guys. Can you see how, like, if we use this old study as a little bit of a proxy, notice how the market was making slightly higher highs and higher lows there, right, through this. And you kind of get lulled into, hey, this looks like a bull market, man. And then there was one more dump against the lows, and then the big honking W comes in. So we're working our way up here. Kind of looks like this. Can we have one more dump here and then carve out a really good looking W there? Boom, 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 and away we go. I would prefer to see that. But hey, that's encouraging. As I said, this is a descending wedge. So by definition, actually, this should be a bullish chart pattern. It's just there's still a bit more room there. But nonetheless, hey, it's looking better than when we started this show. So that's good. There's your Bitcoin, same sort of thing. Can I get a nice little W to come in here? Just break that son of a gun out. Do we maybe need to see another W? And I thought this was interesting. Like this is like reload zones within reload zones. So hopefully you can see we've got that W. So reload zone. And then notice, I thought this was interesting. That W there. Reload zones within reload zones are pretty sexy. So I don't know what they got planned for us. The weekly chart still looks like poop. But these lower time frame charts, and this is kind of the tweet that I put out earlier today, is, if you're going to take a risk in the market, this is probably the area where you want to take that risk. The problem is people come in way up top and they don't even realize how risky it is coming in and buying. And I guess this is sort of the image that I had sort of conveyed, is I kind of think we're at some sort of trough here, the end of June, beginning of July. Seasonally, this is actually a usually half decent time of year. Unfortunately, in these correction years, this is exactly why they have a stamped past performance not indicative of future results. Because sometimes seasonally, you just don't get a rally because the broader market just looks like shit. If Powell comes out and says, not only are we going to raise 50 basis points this meeting, we're going to raise another 50 basis points, then another one, and we might even throw in an emergency rate increase just along the way, just for good measure. That's your message. Don't fight the Fed. And, we just may not get a seasonal rally here in crypto. It's just the way it is. But as risk takers go, right, and this is going back to, kind of Paul, killer trader, horrible predictor, same thing. And I can't really tout myself as a good trader. I think I am, but I don't, obviously don't want to come across as self-grandizing. Am I a good predictor? Nope. I can tell you that right now. Terrible predictor. But I think on balance I do okay trading. Anyway, point of the matter here is that's a reload zone. And as I just showed you a moment ago, that is a reload zone within a reload zone. I mean, the statistics speak for themselves. If you're going to take it, and what's the public sentiment right now? Is it bullish or is it bearish? It's not very happy. So, I mean, hell, you want to go reload zone within a reload zone within a reload zone? Maybe a little trade right off of these lows heading into later on today. It's not the end of the world. If this big honking W comes in, this is probably the conservative way to look at this. We change this to a line chart. Hopefully you can see down, up, down. This low held, so that's good. If we go up through this high, well, then that's starting to spit out W's. Maybe just buy that and risk the size of the W. It's not a bad trade. What was interesting was about a week or two ago, somebody in the level 1 course said, I don't know what to do about paper trading because I just don't understand what to do. And I just said, grab a W and just throw on a trade. And actually that was this original W way over here. And I even, I think it was like the 2-hour chart or something. So you could see the W a little bit better. So this is your interactive time on the call. Hopefully you can see down, up, down, breakout. And really, new traders, let's go and just buy that W And we're going to risk to new lows. Beamish guy says I got to try and shoot for a 2-to-1 risk reward. So that means I can't take profits until way up there. Bet you it sure was tempting to ring the register up here, but that would have been a partial profit. And as I said earlier, you're here to learn the process. You're not really here to have an opinion. And I hate to say it, but the big part of the process here is just strapping this trade setup on and living with the results. I just want you to be able to see this trade. There it is. So you tell me, has anything happened to this particular trade, this W right here, that would actually get you to break your trading plan if your plan is I buy W's, I risk against the bottom of the W, I take profits at 2-to-1 risk reward? Has anything happened here to actually get you to go, oh, fuck, I got to do something? The answer I'm looking for, one person jumped through my hoop. Thank you, sir. No, nothing's happened. You're just sitting there picking your nose, picking your bum, picking the scabs. That's pretty gross. Sorry. You're not, whatever you do, just don't pick at your account because you're going to kill your account. But the irony of it all is there's nothing to do here. This is a really good example for the level oneers learning patience and discipline. Hey, there's the W. Beamer says W's work 60-70% of the time. Let's see what happens. I'm in his damn course. I might as well just see what the hell happens. And am I going to get even more bullish if this big W comes in? Could I say, well, you know what? Now I bet you're going to have higher time frame players that are going to come in. They're going to buy that level. They're going to risk against that level. And they're going to be shooting for a 2-to-1 risk reward, which is that level. Is that a realistic trade? Actually, it's very realistic. It's incredibly cliche, actually, to be perfectly honest with you. This is how most markets work. Remember, what kind of market does the public buy? Does the public buy down markets like this? Public buys up markets. And then, of course, big picture, technical analysis doesn't matter. Just buy and you'll get rich. Who said that? The guy fucking has like 30 gold watches. I think he's the only one who got rich from that advice, but I guess he did pretty well. And I don't know, maybe I should take a lesson from him. Should I? And the next bull, because you guys all know how this works now. Nobody can sit here and say you don't know when the next bull market's coming. I mean, God, we've been doing this long enough. You should see this damn stuff in your sleep now. So should I through the next cycle? And I've been pondering this because remember, I only want to do this a little bit longer. Once I'm done, I'm done. I want to go buy my island and just forget about society. Remember, I got 30 years of don't make any financial decisions, Brian. They'll all work against you coming up. So in this next cycle that happens to be in, Brian, you're going to make lots of money. Should I just shill the fuck out of this and just shill, and just, be the, oh my God, this is the most incredible thing that's happened since yesterday? Should I do that and have everybody on the fucking internet using my referral codes and I'll make millions of dollars off of your backs, but then leave you all holding the bag as the whole damn thing collapses? I don't know. Maybe I should. It's just not morally my character. So. But I wouldn't be surprised if it's not a German guy. It'll be somebody else. I mean, every cycle has them. Well, actually, I don't mind Richard because the reason why he cried, and it was adorable, is that they were making just ridiculous amounts of money, and he saw the fact that they put a top in the market. And he publicly came out and said, you fucking assholes, you ruined this bull market. So actually, he was right. I don't really have a problem with Richard. The people that I have a problem with are the people that, like you see up here. Anybody who's taken any of TRI's education programs, you know bloody well that you got no business buying this. No business whatsoever. Willie stupid, RSI divergence, MACD divergence, no buying pressure at all. Markets come a million miles. You got no business buying here. And then the same damn thing happened again. Huge MACD divs, RSI div, Willie stupid. You got no business buying here. But remember, what did we say? When does the public buy? They buy the tops. They come in, and now we have this fun little tool here. Actually, it's a pretty big tool. That's what she said. We should be able to actually call the next top pretty easily. So what we have to do is, we'll draw our study. And the funny thing is we kind of already know exactly when this next top is coming in. So if anything, Josh, what we need to do is sit down and create a marketing plan that basically has us going along. And maybe we set up like a Bybit account or something like that with referral codes. And we just strap on like one Bitcoin 100x leverage long here. And you just leave it on, perpetual swap kind of thing. It just sits there long. And then our plan is shill the fuck out of this. But once we hit this window, we say, that's it. We're done. What do you think, Josh? Can we come up with that plan? It seems logical to me. But the funny thing is we can actually, the great part about this study is we can actually see the future. You can tell almost exactly when this, and interesting how, isn't that funny how I did that, eh? Because I actually like this thinking that if we don't get any more quantitative easing, I could very easily see Bitcoin have a really, really nice rally, but not make new highs. And everybody's going to be like, I wonder why that happened. Well, because keep in mind, even if we get up into this area, best scenario, Bitcoin's 20,000 cost of production at this level where Bitcoin's like $60,000, $70,000. It's still 3 times cost of production. And the funny thing is about cost of production, which scares me, is, most people in the public, and this really bothers me about the market right now. What is the one word that the entire market is completely and utterly obsessed with right now? One word only. Anyone? No, more to the root of the problem. Starts with an I. Thank you. It's inflation. Now, here's an interesting image. What does inflation actually imply? Does not inflation imply higher prices? And what is the biggest inflationary component for industry? It's natural gas. So if we actually look at the price of natural gas from, here's February, here's the peak, can you see why everybody was freaked out about inflation? To its peak, 130% increase in the price of natural gas. Does that seems inflationary, doesn't it? But here's the case, or here's the kicker to all this, is something's not going right with the inflation narrative right now. So could we actually go through a period? Keep in mind, the public, they're being fucking rammed down their throat. Inflation, 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 inflation. Ah! You listen to Jerry. Oh, inflation's the problem. Inflation. Blame that Putin guy. Rah, 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 rah. But I think, my humble opinion, that's an old story. That these prices have already rolled over. And this is actually the number one reason why they don't include food and energy in core inflation rates, is because they're so damn volatile. They're up and down like a horse drawers. But through this period, and you heard the senator from the great state of Washington, what the hell's her name? Miss I want to suck the fun out of all life. I heard her say, well, gasoline prices at the pump are up 40%. And then she's like, and Mr. Powell, is your interest rate increases, is that going to change anything to that? Well, the funny thing is you might find Miss Great Senate State of Washington Senator, and she knows this. You might find, first and foremost, what letter of the alphabet do we see up here? And if we see the market smiling at us, what the hell are we supposed to be thinking? Are we supposed to be bullish? Can you see the smile? That's a pretty big smile. So how ironic that, yes, again, all that inflation talk, middle of February, 70% increase. But is she talking about the fact that just as of like the end of the month, it was a 20% decrease? So this is actually why I think risk assets actually can rally back here now. I think it's going to be a short-lived window, but we're actually going to have, on my hunch is you're going to have a whole bunch of sort of talking head smarty pantses. Probably this thing has to play itself out. Now, keep in mind, if you're a trader, you're already short this market, right? Aren't you? Something like that. I don't know whether we want to use that low or whether we want to use that low or that low. Maybe your head and shoulders look something like this. I don't know. But anyway, the point I would just make is there's where you're short. You're already killing it on the downside. But this means that the quote unquote inflation that all the politicians are talking about and the central planners and all that and blaming Putin and stuff, that's been bullshit. That has been an outright lie since this date right there. That's where the up stopped and it started going down. So that's the 13th of June. So quite literally now for 1, 2, 3 weeks. 3 weeks, people. This has not been inflationary. This has actually been deflationary. Are they giving the public the wrong message? Well, that's usually what happens, because keep in mind, the public is horrible at timing purchases. They're horrible. These stupid central, I asked you guys earlier, should we listen to any of these central bankers? Oh, Mr. Central Banker, what do you think about the prospects for the economy going forward? We're going to keep track from the middle of 2019 to the middle of 2022. How accurate were you about your economic forecast? Survey says 0. Every time. And, it used to be years gone by. There was a funny joke. I got to get the cartoon. Maybe somebody watching this, you can get the cartoon. Great cartoon. It had like a panel of like 4x4s or a 16 little picture grid. And every single cell in the matrix was a picture of Alan Greenspan with exactly the same facial expression. And it would say, the caption underneath each picture: happy, sad, angry, remorseful, giddy, sleepy. And every single image was exactly the same. And he used to make it a profession. He would say, I am not going to give you an economic forecast because that's just a waste of time. Mr. Powell should take a lesson from Mr. Greenspan's book. That's the way you run central bank, is actually the less you say, the better. Anyway, that's here nor there. Point here is, I think we actually have deflation on our hands right now. So how ironic. The public's all obsessed with inflation. And it looks to me like the bubble is popped and is deflating here. This will be expressed in, like Mr. Nancy. I think even Kramer now is saying get in there and buy stock. It's a bunch of stocks that we've been watching that are all starting to look really interesting. FedEx, probably a really good example. FedEx, of course, sees this energy price. So if I'm not mistaken, FedEx actually went and put in a weekly outside upside key reversal, and it confirmed it. That's a very bullish sign right there. The irony of it all is, I bet you 90% of the public looks at that and goes, that's a bullish sign? Why is that a bullish sign? But it is. I've just worked in this business so long. Outside upside key reversals on weekly charts are insanely bullish. So that's it. Also, too, and we had this was off a daily. We had an outside upside key reversal on the bond market. And that came in on the daily charts right there. That's a bullish sign. Why would that be happening? Wait a minute. I thought you said inflation was a problem. Bond price is rising. That means interest rates are falling. How can inflation be a problem if interest rates are falling? Well, again, the public is being spoon-fed the wrong message. The public is being encouraged to sell the stock market because of the problems of inflation, and they don't understand that inflation is actually yesterday's conversation, not today's conversation, which is so tragic. And then I'll finish off with just this one comment. We like to use market-based proxies to tell us about the economy. Do not listen to Chepa. Chepa is really great at being a banker. He's not so great at actually maybe even just telling you the truth, which is shock. It shouldn't be shocking because keep in mind, the whole goddamn thing's a fraud. But anyway, those kind of comments will get me into trouble. But let's listen to the market. What is the market saying? This is a relationship between the inflation-protected securities. You buy them when you're worried about inflation because they have a payment which offsets the inflation pressure, and securities that don't have that inflation bonus, if you will. If the assets that have the inflation protection bonus are falling relative to the assets that don't have the inflation protection, then what it's saying is the market is not paying up for that privilege. Why? Because they're not worried about rising inflation. It's simple as that. Interesting. Didn't I just say something about outside downside key reversals? Do you see that? Remember I showed you the bond chart. The bonds themselves, just the prices themselves, put in the outside upside key reversal. That's bullish. So fascinating that our inflation proxy, if this is rising, it means inflation is a problem. People are bidding up for those inflation protection. If they're going and topping out and doing things like outside downside key reversals, that must mean that they're not worried about inflation. Why would they not be worried about inflation? Well, maybe because one of the key components of the inflation equation is collapsing in price. Oh, and let's go check in on Mr. Putin. And of course, all of this inflation is his fault. Well, let's go check in on the wheat market. Let's see how they're doing. Are those prices going through the roof? That's funny. I thought we had a problem with inflation. Isn't inflation a problem about rising prices? That doesn't look like a rising prices market, does it? What did we say if you ever see the market smiling at you? Is that bullish or bearish? So, I might argue that the public is being spoon-fed the wrong message. Oh, what a surprise. Do you think Larry Fink is, here's a good example. Do you think if we keep pounding the inflation message, oh my God, it's the end of the world. Do you want to own bonds in an inflationary world? The answer actually technically is no, because then that means the purchasing power of your bond is falling going forward. That is your inflation. That's after the fact. Coming in and pounding the table about how bad inflation is now is like standing there, and this is the analogy I use with students, standing there, the barn doors are flapping in the wind. You and I are standing there, we see the horses running off in the distance, and you turn to me and you ask me, well, Brian, should we have closed the barn door last night? Well, obviously the answer is yes. Is it any good closing the barn door now? The horses are way gone, and closing the barn door now doesn't make a damn bit of difference. And so it's kind of sad, because does it not make sense that Larry Fink and all the sort of crooked capitalists that we have in our society now, they might be short a lot of these bonds from up top here, and they want to now buy them back. So how on earth do they get out of their shorts and get long? Oh, I know. Let's ramp up the fear message and get the public to sell. Mr. Fink is buying into their selling, covering his shorts, buying back his shorts, and he's also probably adding and building a long position off of all of those retail sell orders. So, point of the matter here is, don't get too sucked into the media message. And the irony of it all is this stupid market's going to rally, and then we're going to be back up here, and it's going to start emming out again, and all of our commodities are going to start bottoming, and it'll be here that Mr. Fink will call up all his media minions and say, all right, tell the public that inflation is not a problem and they can go and buy their bonds back. And what is he going to be doing? He's going to be shorting into their buy orders. Jerk. Oh, isn't capitalism wonderful? Okay, I have no idea whether I've answered any questions or not. I should get going because of Liam. Let's try and answer this. So fresh level 2. When using the bot setup, I often find myself setting a stop past 5%. If one scenario, my stop was set close to 10% of the total trade and did not realize until after. Okay, yeah, that's we definitely want to respect that 5% rule. All good though, only paper. Okay. In these situations, do I simply back off from making that trade as I am risking too much? Does it call for concern to be using a bot setup while futures trading? So yeah, you're absolutely right. You're going to have to calculate whatever the risk of the bot setup particularly is, and what it might mean, which is a total pain in the ass, but I've had to do this before, is let's say, for instance, we're trading ES, right? And we're off of, like, say, I don't know, like an hourly chart or something. Here's a good example. So let's say hypothetically, boobity boo, and we have higher time frame levels that justify hunting this. I won't go into that right now, but we're just going to assume that this is a good level to take a shot off of. And there's our bot setup. So boom, what a surprise. 1 low, 2 lows, 3 lows. Nice double bottom right off the 25 level. Then you go and actually ask, well, how many points is this? And you find out it's 78 points. Holy shit. At $12.58 a point, that might be a little bit rich for most of us. Right? That's 7,800, $12.50. So it's 7,800 plus 2.5 times 7,800, whatever the hell that is. That's like 10 fucking grand. That's a lot of money. Now, how are you going to try and approach this? Maybe you say, well, Brian, my trading plan, and really I don't like you risking 5% of your stake on anything. Remember, 5% is the absolute maximum. I've completely fucked up Everything's going against me. We've got to pull the trigger and get the hell out of here before I blow up my account. That's what the 5% rule is. I would even say if you're day trading, maybe do like 1%, 2%. Keep it very, very low. So then if they happen to trip up your stop and you get filled at twice the loss that you thought you were originally going to have, you took 2%. All right, that works out to 4%. It's a disaster. It's a horrible thing, but you did not break the 5% rule. So that I would definitely add to the equation. But what I'd also say too here, let's say you did the math and this came out to like 7% of your portfolio. What I would say you have to do is you say, okay, there's the bot. That's what I want to get in on this thing. But what I'm going to have to do now is you got to do one of two things. Number one, you could pull like a Hogue and say, all right, well, I can only risk, and let's say you did the math and 2% comes out to 20 points. All right, like that. So instead of buying the bot level, the full risk would be, there to there to there. I'm going to, because I just can't afford to take that big of a risk, I'm going to place my order to buy there. That is the amount of risk I can take. Now, the interesting thing about this is that if you do go to that 3-to-1, look at the insane risk reward that it gives you. So in a weird sort of way, I mean, obviously it's higher anxiety. This is more like sort of what Julian does, where he defines his risk window first. There's the setup. It's as big as stink. I can't take that much risk. So what this means is if this market just goes like this, well, shit happens. I missed the trade. Nothing I can do about it. But if we pull back and we get a window where I can get in, maybe I can do something like that. What I'd also say too is if you are going to approach this from this perspective, well, you can always take some profits. Notice 2-to-1, ironically enough, comes in just about where you were originally going to be long. So you could work your bid against here, sell half on the 2-to-1. And interestingly enough, you're in this trade now. Now you can actually risk down to these levels because you've already booked this profit. And you got like no risk on the rest of it. You're golden. Another way you could approach this, and this is the way I approach this, because just working stink bids down against there, I don't like doing that. But what I will do is I'll go down to like, say, I don't know, let's go a 9-minute chart. Now you see that actually this is a range unto itself. So we could break this apart. So we go bot setup, bot trade. So now I'm going to be hunting 3 higher lows. Just maybe it goes like this, and away we go. And I'm going to take this trade down in here. Maybe it goes further, right? Hits 33. Okay, fine. Great, we did that. Right, and now I'm going to hunt this trade. It's off a lower time frame, but I'm not taking nearly the amount of risk that Mr. Higher time frame trader was taking. So I don't know whether that helps. Hopefully it does. You're probably getting there, but moving down into micros is another option. Okay, so there's also that. We're working off of the big contracts. You could always go down, I think it's just MEFs, isn't it? I think that's the way it works. So now we're on a smaller contract. So instead of $12.50 a point, now off these micros, is it $1.20 a point? Yeah. So now it's sort of 1/10 that size. So now when you do the math off of these micros, that is a stomachable risk for you to consider. So there's also that as well. And, keep in mind, these micro contracts, they're relatively new. When I was prop trading, this didn't exist. You couldn't do this. So if anything, this is an added feature. And then I suppose for Grim, but you all know My thoughts on Forex. So I'm not going to really go down that road too much here. I was telling the level oneers, I would prefer that you just avoid Forex. But I suppose you could go down to Forex. And in Forex, you can actually customize the actual trade size. The only problem is you're going to put your stop in Forex. You're going to put your stop right below here. And keep in mind, in Forex, they wouldn't trade this. They would trade like a CFD. And what sucks is you'll put your stop at 37.40. We'll say 1 point below here. So your stop is sitting right there. The market will come down. It will never trade here, but your Forex broker will give you a fill here, even though you will never see the price on the actual product that you're charting. You'll never see it trade at those levels. It's extremely frustrating about Forex, so that's why I don't trade Forex. Alrighty. Okay, now I got to get out of here because I'm actually running late. So last question here. What would be a good asset to practice setups on lower time frames for practice trades? ES, it's a nice liquid contract. The crude oil is very, very popular. Gold, it's it's funny. 20 years ago, not that much interest in trading gold. Nowadays, now there's lots of volatility. It trades like the wind. So those are three assets. You can try trading Bitcoin and Ethereum. I find that there's still a little bit choppy going off of those really lower time frames. I would, I don't know if you're in the level 1, level 2, or level 3 program. If you're level 1, I would stick with the big ones, right? I suppose you could do Bitcoin off of like a Coinbase or something like that. Nice liquid. Make sure it's a very, very liquid market. So don't be trading like Bitcoin off of some tertiary third-party exchange. It'll just be really crappy trading. Same thing with Ethereum. I wouldn't really recommend going down and looking at all the various little altcoins and stuff. I know Sjord, he has a whole bunch of these little altcoins for the lower time frame automated trading setups. I'm not really a big fan of the lower time frame sort of mid-tier names. I think they're all basically going to follow in track with Bitcoin and Ethereum. And the lower you go, the smaller you go, the more susceptible to manipulation there is. And really, I would argue for your 100 paper trades, you want to make it really simple. ES futures, crude futures, gold futures, Bitcoin futures off CME or off of something like Coinbase, Ethereum futures off CME or Coinbase, something like that. I'm fine with that. Those 5 markets there, that should definitely keep you busy. Okay, I got to get out of here. So hope you guys got some value out of that today. A little bit sloppy. It was all over the place. Lots of rants, lots of bitching, but maybe it was good edutainment. Who knows? Yeah, I'm just going to leave it at that because, like I said, I'm already late. So have yourselves a great day. PMA for the win. I'll talk to everybody on the site again when I'm back tomorrow for Monday Daily Brief. We'll do sort of a full signal review and dashboard review. And, of course, we'll see everybody on the site in the lounge when I get back from Liam. Wish me all luck with the boy. Thank you very much, everybody, for your awesome PMA notes. It helps a lot. So I appreciate that, Jason. I know there's a couple of people in here in the lounge that also passed along best wishes. So thank you very much, everybody. I showed you at the beginning of this video. You all know the love of my life, and what it is I do. So there's no bullshit about Brian. Like I said, your wishes for Liam to be kind to me in the afternoon makes a big difference. So keep on those PMA thoughts. All right, everybody. Have yourselves a great day. All the best, and bye for now.